take some copious notes, guys. I do have a question for each and every last one of you guys. Yesterday, after we actually had the first day of boot camp, day one, we had a lot of feedback. But the question is this, and this is what will separate the people who will make a little bit of money, no money, or a ton of money, right? The people who left this thing yesterday and went back over their notes, I'm gonna just tell you right now, guys, if that's not you, I want to make sure you do that today, right? Anytime you actually get information like that, like what you got yesterday, and you know it's going to be information that you're going to deploy to change your life, change your finances, and add additional streams of income to your lifestyle, guys, you want to make sure you go over that information again. Immediately after you get it, just go over it. Go over your notes, get it in your spirit. That way you don't lose it, right? You had a lot of people who had a lot of energy yesterday, a lot of excitement. They had a lot of hope, and they took that energy and didn't put it anywhere, right? You want to make sure you actually take it, process it, and treat it like a seven-figure earner would treat it, right? Go back and then compartmentalize it. Go back and start to plan around it. Go back and start to get your questions answered and lined up, and get yourself ready to rock and roll. Because when we launch this project and we let everybody go, we turn you loose and we get you trained, we want to make sure that you are equipped and ready to rock and roll. So with that being said, guys, I want to make sure you guys are ready. You guys are ready to be turned up. I know he's got his music. I know we got his music. And Miss Bean, we can go ahead and turn it on so we can get our host Kronk and ready to rock and roll again. Let's see here. Or Donnie, if you have it. Whichever boy, y'all. I know Kim was looking for it. Let's see here.
You ready to rock and roll? Let me get some 4-5 in the chat. See those fire emojis. Chat, ready to go. Let's go.
C-130 rolling down the trail. C-130 rolling down the trail. U.S. Marines gonna take a little trail. U.S. Marines gonna take a little trail. Mission top secret destination unknown. Mission top secret destination unknown. God only knows where we're coming home. God only knows where we're coming home. Stand up, buckle up, shuffle through the door. Stand up, buckle up, shuffle through the door. Jump right out and shout Marine Corps. Jump right out and shout.
All right. What is up, Mrs. B? How you doing today? I love the fatigues on. Who's ready to get it?
Let's go.
Oh, man. Anything you guys want to touch on before we get started this morning?
We're going to let you go ahead and do your thing. Let you
that is it, guys. There it is, guys. Who's ready? I hope you got your coffee. Hope you got your pen and pads and your note takers, because note takers are money makers. Pull the pin. Frag out. That's what I'm talking about. Let's go. We are anxious from yesterday. Hey, John, what's up? Oh, I got back in the chat. There we go. Miss Cody, what is up? I see I got Canada in the house. Oh, man, I am excited. I'm fired up to be here with each and every one of you guys today. Again, for those who don't know, jumping in for the first time today, Donnie Pips coming to you live from beautiful New York. Normally I say Miami, but I'm in New York right now. Not as beautiful as Miami, but I got that chilly weather, right? That Carhartt weather and them Timberlands. So I hope you guys got your boots on and you are ready to get it. There we go, Copenhagen, Denmark. That's my left hand right there. Oh, man, I'm excited, guys. So yesterday, we went over the boring stuff of trading, right? We talked about what makes the market move, how we get paid, and things like that, right? We went over leverage and how the brokers give us money to trade, and how, yep, the boring stuff, right? You always get that boring stuff out of the way first, okay? So now, after that boring stuff, now we're going to get into practical application. And somebody said yesterday, why do major countries have so much power to sway the markets because they're bigger. If anything happens to those big countries, again, we're going to know something's going to happen. I know yesterday, President Trump sent out a tweet yesterday in regards to the air base in Iraq. And for those who know, I've been to Iraq. And of course, looking at certain, pairs and things like that, when we're looking at the market, we see the effect that his tweet had, right? He talked about us, if they didn't give back the airbase, the US was going to respond. And you see what happened to crypto kind of yesterday, just straight dropped out the sky, right? Because that market is open 24/7. Okay, so things like that have a way of moving the market. So we talked about the market movers. Today, we're going to talk about actually looking at how we make money. We talked about those things called a pip, right? Points and percentage. But for us, we just needed to go in our direction because depending on how aggressive we are at our trades, I don't want to say the word bets, but how aggressive we are at our trades, we can then raise our lot size. How much money are we willing to use to take that trade and position ourselves for the future? Okay, so we're going to get into it today, and we're going to talk about this beautiful chart today before I get into the psychology of trading. That's kind of last, right? The mindset thing and stuff like that. That's kind of on the back burner, right? Because everybody's mindset is a little bit different. And I know we've got some great mindset coaches on here now with Mr. and Mrs. Bean. I've got a chance to talk to some of the people on here, and their mindsets are really, really awesome. Okay, so we're going to go over that last. Today, we're actually going to go over what are we looking at? Okay, I talked about this website yesterday called TradingView, right? And here it is today. I see the numbers are climbing. Keep coming on in, guys. Keep sharing the link. That's awesome. I see 155 of you guys are already up. I got my coffee with me. I hope you guys got yours. And of course, my Marine Corps mug, because what Marine wouldn't have a Marine Corps mug, all right? Donnie, do you see Mr. Bean's jersey? Yeah, he got the throwback Green Bay jersey on. So now I got to get one for my mom. He's got the Desert Storm Green Bay jersey on. So I definitely gotta get a one for my mom. So yeah, this is definitely a nice jersey, but it's football day. So thank you guys for being here with me today. Okay. So right now to you guys, this looks like chaos. Okay. So I want you guys to write something down. Okay. And I'm going to be writing with you guys so you guys can see it as well. Is that all right with you guys? We're going to keep it real. All right. I'm ready, Don. Here we go. We're going to write it down. Trading is very simple. And here, what was that?
What's the website name to create the link? I'm sorry.
Tradingview.com. Okay. And if you want to follow along, it's tradingview.com. And then I've got some of my students in here, Bernard and different guys in here that are going to be posting some links in the chat. So tradingview.com. There we go, Greg. There's Sylvie. All right. Tradingview.com. You can create a free account. But there's a subscription base to it as well for like $14 a month. So just go ahead and, create a free account. Okay, this is where you're going to do the legwork of trading. Remember what I said, that you didn't need to pick up the phone, call a broker, right? Everybody's seen the scene from The Wolf of Wall Street with Leonardo DiCaprio when he's on the phone with the guy and he's suckering the guy in for more money. You don't have to no longer do that, right? You can now do this from the comfort of your own home from your smartphone. Okay. All right, from your smartphone. So two ways you can trade: from the phone or from the computer. I'm going to show you from the computer. I'm not as seasoned as some people, but I like a bigger screen. Okay, you guys see I've got some portholes on my face. We call them you guys call them glasses. We call them portholes. So I'm a little blind. So I like the bigger screen. Okay, but it's going to be up your preference. Here on TradingView, just to give you a quick overview, it goes over stocks, options, futures. Okay, so you get a chance to see everything in the market. Okay, so the institutions don't really have too much of a big advantage over you guys as well, because you get to see it in real time. Okay, if I go here to symbol search, it will bring me up the symbol that I need. Now, what's a symbol? A symbol is nothing more than the ticker of that pair we're going to be trading. Okay, those are just small things you're going to learn in our course later on, and Mr. Bean will talk about that later. Okay, but of course, you see right now I'm on Bitcoin. Why am I on Bitcoin right now? Well, somebody says I want to get into Bitcoin trading, but I don't have any money. I don't have $116,000 to get into Bitcoin trading. Well, yes, in theoretical sense, you don't have $116,000 to buy a Bitcoin, but there are two ways to trade cryptocurrency. One of those ways happens to be what's called the store of use. That is the version of you're actually buying a physical Bitcoin or a fractal, as John just said, right? You can buy it as a store of use. That means you actually hold and own that cryptocurrency. Okay, so you own one Bitcoin, which is worth $116,000, or you buy a fractal of it, which could be $10, $25, or so forth, right? That's the store of use way of buying crypto, a physical asset. Okay, just like if you buy a house, you own that house. You go to the mortgage company and you buy this physical house. Well, then there's another side of trading crypto where you don't need $116,000. There's the Forex side. On the Forex side, you literally need pennies on the dollar, $50, $100 to trade cryptocurrency or Bitcoin. How's that sound? Does that sound like something you can get behind where you don't need $100,000? Because people say, well, I was late on crypto, so I'm just going to forget about it. Well, no, you can trade it right now. Okay. And that's pretty awesome. So now there's the trading version of it, which is done through Forex, the foreign exchange. Okay. And the foreign exchange version is where you control when you get in and out of the market. And if you are correct, you make a profit. Okay. So we're going to take a look at Bitcoin. That's the one we're going to use as an example. All right. So as you guys can see here, I've got a bunch of stuff on my chart. All right. This is what it looks like. Now, there are different types of charts. Right now, we are looking at a candlestick chart. This is probably the most popular chart that you will see and use. Okay. But just by playing around with TradingView, you have a lot of options. Okay. And I'm just going to show you what different charts look like. One happens to be a bar chart, which nobody understands. Okay. Looks a little bit confusing. Yes, that would be classed as a pair. So Bitcoin USD is a pair. Everything that you're going to see is considered a pair. Even if you see it as a one, just three letters, XAU is still a pair to something. It's just not showing US dollar, okay? But everything is considered a pair, all right? So there's the bar chart, which kind of looks really confusing, right? We're so glad we don't have to worry about this, okay? Then you have something more simpler that you might see in everyday, the line chart. On the line chart, it kind of looks like this, right? Like, what am I looking at? You guys have seen Hollywood. We've seen this crazy stuff on the screens and stuff like that. And it kind of looks like this. Still looks a little confusing, right? Like, oh my God, Donnie, I'm lost. I don't know what I'm looking at. Don't worry, neither do I. Okay, that's a joke, but yes, neither do I. Okay, we want to keep it simple. There's going to be times when we're going to need a line chart, but right now, the line chart just simply shows what we know as highs and lows, okay? We can tell by just looking at this chart where the market started from, if it's trending, which is going to be very important, okay? If it's consolidating, as I talked about yesterday, or if the market is now changed directions. So line charts are fairly used. We're going to be using them as well, okay? And then you have other charts such as the Heikin-Ashi, okay? The Heikin-Ashi simply looks like this, and a lot of people do prefer the Heikin-Ashis, but the problem with this right here, the Heikin-Ashis, is that every candle starts in the middle of the previous candle. So for new traders, this is very, very confusing, okay? How many people are confused with this? And then somebody always says, well, Donnie, what do the red represent and what does the green represent? Well, Donnie likes to keep it simple. The green represents and the red represents a candle, okay? Very simple, a candle. And we're going to go back to just our regular candles, okay? So as you guys are learning, I recommend that you learn just simply on candles, okay? Because that's what we trade. And in a candle, or what is a candle? And I'm going to make this really big, okay, before I go into something else. Okay, everybody can see that? I'm a little blind. Again, I got portholes on. I'm a little blind, so I want to make sure everybody can see that. Give me a 1 in the chat if you can see that. All right, unless you're on your smart device, okay, it might be a little bit smaller. Each one of these are candles, and a candle just simply represents the movement of money. A candle represents the movement of money in a specific period of time. Okay? In a specific period of time. We are going to learn how to be time frame traders. Okay? Actually, we're going to learn to be time frame traders, right? Now, everybody on here is going to be a different time frame trader. Okay? But we're going to learn that on each different time frame, there can be a potential for money to be made. That means you don't have to stay on the time frame. Think of a time frame. And what I mean by time frame is you have a 1 hour, you have a 2 hour, right? Each one of these candles represents the amount of money being moved on a specific time frame. So one candle right now represents, I am on the daily. So one candle, as we can see this green one here, just simply represents 24 hours. Make sense to everybody? Kind of simple, right? And in 24 hours, we have what's known as an open, a close, a low, and a high. And we're going to talk about that because that's going to be very, very important. So again, first, you're a time frame trader. There are multiple time frames that you can trade on. And somebody said, well, Donnie, that sounds great, but why would I want to go to different time frames? Think of it like this. You're a gang member, right? Back in the 80s, back in the 40s and 50s, they had gangs that controlled neighborhoods, right? And on one neighborhood, you talk about the whole Brooklyn area, right? And one gang controlled that area, right? But now as you zoomed into Brooklyn a little bit more, and on one set area, let's say on one block, let's say 79th Underhill Avenue, let's say Underhill Avenue was controlled by a different colored gang, right? Overall, the whole area of Brooklyn was controlled by one gang. But then as you actually zoomed into that street or that neighborhood, it was controlled by a different gang. That's the same analogy of time frames. If I'm looking on the daily, right now we can see that it's green, which means that the buyers controlled the daily. But then if I go to a lower time frame, it could possibly be red and in a downtrend, which means the sellers control the area. Make sense? That's how trading is simply analyzed. Who is in control at that point in time? Okay. Now, I'm only going to touch base on a candlestick real fast. A candlestick has certain features that we need to know. A candlestick, if it's green, means that the price of the market went up. So therefore, there's an open. There's an open, which is at a base of a candle, not on a wick. So we have a body of a candle, we have a wick of a candle, and we have a close of a candle. Okay, and in between the open and close is known as the body. Okay, so we have a close. Okay, that means that the market opened at 116.49. At some point in the day, it dropped down, and this is our low. At some point in these 24 hours, it dropped all the way down to 116.151. And at some point in the 24 hours, it reached a price point of 117.980 for a high. Now, a lot of people get that confused. Just because the market reached a high doesn't mean it closed there. Does everybody understand that? Just because it reached a high, it doesn't mean it closed there. Just like stocks, today, something can be going well. It's the open. We have Coffee Bean Incorporated. Mr. Bean just has the best last name because I'm a coffee fanatic, right? So we have Bean Incorporated, Coffee Bean Incorporated LLC, and today's our launch day, right? Like our launch for Build, right? It's our launch day, and there was so much hype that price shot all the way up to 117. Well, now the people who got in on our stock at 116, what do you think they did when price reached 117? What do you think they did? They sold. Exactly. They
They're
sold or they
selling.
took a profit. Yeah. Exactly. So now as people sold, price started dropping. That means the buyers were losing to now sellers. Sellers were in. Now remember in Forex, I told you that there are people who don't have to buy low and sell high. There are individuals sitting up here licking their lips saying, oh, I'm going to take a sell at that high. Okay. So in Forex, there's a tug of war going on. Okay. Between buyers and sellers. And here's the best thing about Forex. Buyers and sellers can enter the market at any given time. So I want you guys again to throw that notion out that buy low, sell high. No, you can wait for a high price and sell. Okay. So that's about a candlestick. Now, if you noticed, I'm on the daily. I have an open, a close, a high, and a low. All right. And again, this is a boot camp. So I want to make sure that for those who've never seen trading before, they understand the basics. So for my advanced people, please bear with me. Okay. Remember I said we're time frame traders. On this daily, it looks like the buyers really took over from the sellers from the previous day candle. Okay. But if I go down to another time frame, watch how the market looks. And I'm going to go to the 4 hour. In the 4 hour, look at the battle that was being fought. So this looks a lot different, right? Do you guys see where the open happened for the day? We see the high of the day, and then we see where the close of the day took place. So in that daily, if you go down to a lower time frame, there's a war being fought between what we call the buyers and the sellers. All right. And again, this is boot camp, so I'm going to mention that. Okay. In this war, here's the best thing about it. Okay. We all know what a turncoat is, right? What's a turncoat? Anybody heard that term before? A turncoat? For those who don't know, my favorite subject was history. All right, so I can talk about history all day long.
British trader, man.
There's a trader, but now there's a trader. Okay, there was a trade. They're traders. Now in trading, guess what? You get to become a turncoat because you're a trader. Get it? Get it? Get the pun? You're a trader. You can become a trader at any given time in the market. So you don't have to stay on team green. All right. We don't have to stay on team green. You can flip at any given time and go to team red. You can be like, well, the sellers are winning, so I'm just going to flip my coat inside out and go to the other side without any consequences on repercussions. Now, guess what? You can do that multiple times a day as long as you're making profits. Okay. Well, Doctor, I seen your question, and it's going to get to my lead way. Yep. Turncoat sometimes switches sides. And Michelle, that's all we want to do. I'm a turncoat. How many people want to be a turncoat in trading? Me, right? Because you can be trading in one direction and then decide to say, you know what, I've identified, and what you're going to learn here at Build, you're going to be able to identify when the traders step into the market. And I always use this analogy. I always talk about the haunted house because my nickname was Don Knotts, and I didn't know who that was growing up. Okay, I'm a little bit younger than a lot of you guys, but my mom used to call me Don Knotts in the Ghost of Mr. Chicken. Okay, because every time she would come home, I would have every light on in the house. Okay, and she used to say, boy, she says, you know your own house. If you're in the dark, you can get away with all the lights on. They're gonna know where you at. Okay, well, if you go into a haunted house by yourself, and then I watched Don Knotts, of course, and I got to see the funniness of the piano playing and stuff like that, and I wasn't too impressed of being called Don Knotts. All right, but if you go into a haunted house by yourself, how many people scared? I am. I just listen, Marine or not, okay? All right, Marine or not, I hear that. Woo, I'm gone. All right. You go in a haunted house, you're scared. But if you go into a haunted house with 50 people, are you scared? No. You've entered into the market with everybody else. Okay, and we're going to talk about those simple concepts of entering the Forex market. Now, I want you guys to hold on to those no's because you guys just said, if I know that 50 people are going into the haunted house, I'm not scared anymore. I'm going in there, shoot, I'm turning on the lights. I'm teasing the ghost, right? I'm mocking him. Okay. Yep, the movie is called Don Knotts and the Ghost of Mr. Chicken. Yep. I'm teasing the ghost, because I got all you guys in there with me. I got 179 people in the market with me. So now that you guys know that concept, as long as I can run faster than most, okay? As long as you know that concept, I want you guys to keep that concept in your mind when it comes to trading. And I told you guys, my trading style is a little different. I make it so you can be like, oh, aha. And every day when it comes to trading, you should have an aha moment, okay? And we're going to go over that. So now looking at this information, what we need to find out is, where is everybody at? And somebody just sent me a private message that, Donnie, trading can't be this simple. It is. If you can find out where Mr. and Miss Bean are getting in the market at, aren't you going to do it? Because he's one of the best I've ever seen. I got a chance to watch a lot of his videos, man, and I'm not tooting his horn, but I got a lot of people from other companies that tell me all the time, are you really with Mr. Bean? Have you really partnered with this guy? Oh, man, if you would have been here when Sam Bean was here. That's all I've been hearing for the past 3 years. Right? Because I knew where to get in, where I fit in. And that's what we're going to do today. So now, one, we're going to be time frame traders. We see that on the 4-hour, this looks a little bit scary. How many people right now don't understand what's going on right now? Perfect. And that's the way that perfect. So watch, at the end of these 3 hours, I'm going to show you what we're going to look at. So now, first things first, I'm going to tell you the market moves in 3 ways. Okay. Market moves in 3 ways. We already know that we're time frame traders. Okay. By the end of this, we're going to be able to identify what time frame we like. Okay. And how we're going to make that money. So the market moves in 3 ways. Up, down, and sideways. Market can't go backwards. So we're always going to be looking at the market, or these charts or candlesticks. Each one of these is called a candlestick. And as you guys can see why, it has a wick to it, a body, and then another wick on the bottom. Okay, so it's called a candlestick. And that's why. I've already told you that each one of these candlesticks represents a time frame that you're on. So right now I'm on the 4-hour. So each one of these candlesticks represents 4 hours of price movement. Each candlestick represents 4 hours of price movement. Now, as you guys can see here, the market went up and then it went sideways. Everybody see that? The market pushed up. And then I'm going to make these lines a little bit fatter just so you guys can see it. Okay, the market went up, and as we can see here, the market went sideways. Okay, now the market will always move from left to right. Okay, and as we talked about those different analysis yesterday, we're going to now identify the technical analysis and the fundamental analysis. And the question was, why are some of the wicks longer and shorter? Because in that 4-hour time period, the market makers, you and I, entered the market more. Okay, that just means there were more people trading at that time. The bigger this candlestick, the more participants. The smaller the candlestick, less participants. The bigger the wick, the greater the battle. So if you have a big wick, as we see here on this candle here, that means that was a battle. That means the sellers were in charge. And then look at this big wick. So who took over? Who took over this 4-hour time frame? The buyers. The buyers made an attempt to say, hey, we need price to hold at this point. Okay. And that's what happens. And I'm going to show why that happens. And when you know why the buyers took over here, how many people can get into the market? If you know why the buyer said, we're going to all step in, and you, Carla, can identify that before it even happens, can you push the button and say, I'm going to get into a buy and make money? Yes, absolutely. Okay, so now as the market moves up, down, and sideways, it's our job to identify that. Now, depending on what time frame you are on, it might be a little bit more chaotic, right? You're knee deep in the battlefield. You don't know what's going on. So if I look at a lower time frame, and time frames can go all the way from 1 minute to from seconds to 1 minute. Okay, this is what the 1 minute chart looks like. It can go to 3 minute, 5 minute, 15 minutes. So each one of these candles represents 15 minutes of movement, of price action, right? Again, where we're fighting a war, there's action happening. 15 minutes of price action, 30 minutes of price action. So look at the sellers were in charge and buyers have now taken over. 45 minutes of action, 1 hour of action. And somebody said, what's the best time frame to be on? As a new trader, I recommend everybody on here on the 1 hour. Okay, as a new trader, I recommend everybody on at 1 hour. Okay. So now the first thing we're going to understand and learn about looking at trading is the trend. The trend is nothing more than identifying what direction the market is going. A trend is nothing more than identifying what direction the market is going. Think of a moving train. If the train is going southbound, okay, we want to be on the train as it's going southbound, right? We want to go with all that force and that momentum, okay? Can you go against the train? Somebody said, well, why are you asking me if I can go against the train? We know you can't go against the train. No, so therefore you can't go against the market. Remember, $7.2 trillion a day, you can't go against it. So here's what we're going to do. We're going to ride the train. We're going to piggyback the money. And the best way to do that is, one, by identifying the trend. So when we first come to trading, and again, remember the market moves in 3 ways. We are then going to identify the trend, okay? Okay, now there are different ways to identify the trend, okay? There are different ways to identify the trend. First way is just simply look at the candlesticks and see what is the bigger move, right? And right now we can see that the bigger move was an uptrend, okay? Was an uptrend here on the 2 hour. Was an uptrend, right? Bigger move, the market was trending up. But then we notice the market is consolidating. Consolidation is considered a trend, okay? So once we can ID the trend, as we see here, it says, well, my trend was up, and that's the one I'm going to go with because it's bigger than the trend of consolidation. You can do that. So you're going to choose what direction trend is. Another way to identify the trend is we're simply going to go to the daily. You're going to go to the daily, and you're simply going to see what move is bigger. And as we can see, right now, we are trending in what direction? Up. Okay. Before we had a downtrend. So you guys can see here, the market was trending down, and now the market has started to trend where? Up. Everybody see that? So now the current market is trending up. Another way to identify the trend is by indicators. Indicators are just simply tools that are going to help you in the market, such as a moving average, okay? Now, for those who don't know what indicators are, again, indicators are just mathematical tools to help you in your trading journey. Excuse me. That way you don't have to try to figure out the math. So up here, right in the middle of my screen, you guys can see it says indicators. Again, indicators are going to be tools to help you, mathematical tools to help you in your trading journey. Okay, think of them as power-ups, right? You're playing a video game, and then you need your character to get special equipment and different things like that. It's the same concept. These are your power-ups or your tools to defeat the boss, and the boss is profit. Okay, so I'm going to go to indicators. And I'm going to go to what's known as my moving average, okay? And a moving average here on TradingView is just called moving simple average, and that's fine. I'm going to add that to my chart. Okay. Perfect. All right. And I see your guys' questions in there. Now, the moving average, there are certain numbers set on the moving average. A moving average is nothing more than the average of a set amount of candles in the past. Okay? The average of price. So somebody says, well, what does average mean? The average of price. Now, if you knew where the ground was, and here in New York, we play wall ball, right? If I know how close I am to the wall, I'm not going to throw the ball as hard, right? And if I know how further back I am, I'm going to throw the ball pretty hard, right? But what do I know? What never moves? The wall. If you knew the average of price, you know that price, no matter where it's at, it must come back to where? The average. Okay? That's all the moving average is. And that's going to help you say, well, price has to come back at some point to its average. We all have taken math, really simple. I told you guys that this is math for Marines, all right? And math for Marines was 2 + 2, all right? If 2 crayons are mixed with 3 crayons, what colors do you get? That's how easy math is, okay? That's all the math we're going to be doing here in trading, all right? So I'm going to use the moving average. And what moving average I'm going to use is I'm going to use the 200-day moving average, okay? You guys are learning some secret sauce right now, okay? I'm going to use the 200-day moving average on my chart. Now, the overall trend, looking at the daily, is in what direction? If price is above this, we are considered an uptrend. If price is below this orange line on the daily, we're in a downtrend. So that's one way of identifying the trend. But the daily only gives us the overall trend, right? It doesn't kind of really help us say, hey, you know what? I want to trade this. So we can go to another moving average. Another moving average, which is more of a realistic moving average, is the 20 moving average. And the 20 moving average is kind of going to tell us right now what our current trend is. So you have an overall trend, which can be found in the daily, and then you have a current trend. They are two different trends. And as you guys can see here with the 20 moving average, this means that the last 20 candles, the average in the market of price is 112,926. The institutions use the 200. That's why. And you always want to be able to piggyback with the institutions. You want to be able to ride that train. So we have to just know which direction the train is going. Okay. But the 20 moving average. Okay. Question, are all the simple moving averages on yours exponential? Don't worry about that right now, doctor. That exponential, simple, and all that stuff, it's a mathematical equation that you really won't see too much of a difference depending on what strategy you're using. Okay. I could show you the math and you're just going to be like, that's crazy. All right. So don't worry about that right now. Simple moving average is perfectly fine. All right. Exponential is perfectly fine. It's when it comes to the numbers, it's tomatoes. Okay. So right now I have the 20 moving average. If I'm trading on the daily, I'm in an uptrend. Does everybody see that? We're above the 20 moving average. So your moving average that you're going to be using as new traders to start off with is going to be your 20 moving average. Okay. So it's going to be one of the tools you're going to use. Is going to be your 20 moving average. And we'll go over that later. If I go to the 4-hour, I'm above my 20 moving average. See, it's down here. Price is above it. So I'm still in an uptrend overall. Go to the 3-hour and kind of the same thing. Okay. Go to the 1-hour. I'm below my 20 moving average. So, team 1-hour is in what type of a trend right now? If I'm below the 20 moving average, they're in sells. Exactly. They're looking for the sells. Okay. And why is this important? Well, if I can figure out where my moving average is, I can then use the moving average as what we're going to talk about, our first major thing, support and resistance. So now we're really going to get in the meat and potatoes of trading. Right now, we've identified that each one of these candlesticks represents price. Based on the color, it tells us who won that battle. If I see green candles, I know that buyers are in control. If I see a red candle, I know that sellers are in control. We all got that? Now we're going to talk about support and resistance. Okay? First, we're going to talk about support. Actually, I'm going to do one better. This is against my better judgment, and I know people are going to start texting me. There's a word called price action. How many people have heard of it? This is going to be the only time you're going to hear me mention this word. How many people have heard of the word price action? I know, Vic. I know. I'm gritting. What does price action mean to you? I know you guys have been on these guru calls and they've talked about when somebody's asked the question, they've said, somebody's asked a great question and they'll be like, price action. Well, what does that mean? Yep, movement of price. That's one. What else? Somebody else, you look it up if you want. What else? Movement of price. That's one. I'm going to give you a simple definition of price action. Price movement in the direction. Price action is nothing more than at a particular point on the map, or price point, should I say, price point, something happened. Something happened at a particular area or point on a price chart. That's price action. Now, it's up to us to figure out how to equate that to trading, right? Because we're like, well, how do I find price action? Right? How do I find price action? Well, by finding price action, there can be multiple things in price action. There can be what we call support and resistance. Exactly, Vic. Okay? There can be what we call support and resistance. And this is going to be the first way we're going to learn how to actually take a trade. All right, so in price action, okay, should I say in this area, right, we will find support and resistance. Support. All right. Price on a price chart, because this is a price chart, right? And I'm always going to be talking about price chart. Why am I keep mentioning the word price? Yep, Caleb can find it easy. Caleb's 11, by the way. Caleb can find it very easy. Why do I keep mentioning the word price? Because you must always recognize as traders, where is current price, okay? On a price chart, so price, telling you right there, price, I need to know where price is. Price on a price chart, okay, stops moving down and starts moving up. So when we find that, we can now take a trade off of a support line. That means buyers control a support line. If price was moving down and then stops and then starts moving up, we can possibly find what's known as support. Does that make sense to everybody? Just like a floor. So if I stand up right now, I have the floor beneath me. So support is our floor, and we want to make sure that floor is sturdy. Support, for those who need a little bit more, support is controlled by the buyers. Well, Donnie, why is this important? Well, right now, if Will knew that the buyers controlled price at a certain point, right? Price, we're going to keep talking about that. If Will knew that price was controlled by the buyers at a certain price point, what could Will do when price comes back to that point? Buy, right? Buyers control that point. Consider a buy. No, we're not just going to consider. We could possibly take the trade, right? We're going to buy. So Donnie, how do I find that? Yep, get in the trade, Tim. How do I find that? I'm going to show you guys how simple this is and how we find that. So remember, the market trends in 3 ways: up, down, and sideways. And I'm going to get into that trend in just a moment. But I want you guys to see this first. And I always do this a little bit backwards than other educators. Watch how simple it is to find this. Notice my chart has disappeared, right? Can everybody see these 2 candles? And we remember that the base of a green candle at the top means that the market closed. The top of a red candle knows that the market opened, all right, on a sell candle. Everybody see that? We have a close of a buy candle, or a bullish candle, as we say. And then we have the open right after a close, comes an open, and it's going in the opposite direction. Does everybody see how even that is? If I put my little cursor on there, does everybody see how even that is? I want to make sure everybody can see that. How even and perfect that is. I got 188 people on here. Well, guess what we just found? We just found support or resistance, depending on where the market is at. Okay? So right now, if price is above this identification marker, which I call a base, it's either going to be support or resistance. Okay? Watch how easy this is. Now, resistance is the ceiling. Resistance is simply the ceiling. So right now I'm in the house. I'm in my mom's house. I got the floor below me. I got support. I stand up. I got support. Well, now nobody on here can beat me in basketball, right? And I'm just throwing those shots out there. But if I jump right now, what am I going to hit? Can I potentially hit? The ceiling.
Ceiling.
There's something there. Now, that is resistance in the market. And I'm going to show you this. Resistance is price on a price chart stops moving up, right? I jumped in the air and all of a sudden I hit my head. I was going up, price on a price chart stops moving up and starts moving down. Resistance is controlled by, who do you think?
The sellers.
The sellers. Exactly. Controlled by the sellers. Exactly. Makes sense, right? Now, how do I identify them before I show you? Simple. If current price is above, should I say, our price action point, and in this case, we're talking about support and resistance, right? So the word price action point just simply means support or resistance. If price is above our price action point, our base represents support. And again, that line that I just drawn, I'm going to tell you, I call it a base just to help you out. If current price is below our price action point, right? our base represents resistance. How simple did I just make this? Now I'm going to show you actually find it, how simple it is. And I just did for one. Very simple, right? So now let's identify it on price chart, because somebody said to me, I have still yet to identify support and resistance easily. Well, we just talked about price. Right now, current price is represented by the little dotted green line. Does everybody see that? Current price on Bitcoin, based on my chart right now, I do have a frozen chart, is at 117,125. Did we not just recognize a base right here? A beautiful base. Everybody see that? That base represents support or resistance. That's how simple it was. To find that looking symbol, can everybody find that? That pattern. And open and close equally and down, right? We know that current price right now is down at 117,125. Therefore, if price is below our price action point, this line represents what?
Resistance.
Resistance. Good job, Mary. And I'm simply going to make that red. I'm OCD. So my resistance lines are going to be red because sellers represent what? Red in this case. So I make them the color of my sellers. So that is real simple. But now as I look down on the chart, I notice I have another base here and price is below me, which means this base represents what?
Support.
Resistance, right? Now, if I come to the left a little bit in the charts, because one of the things about trading is you have to look left when it comes to technical analysis. We noticed in the chart right now looking, I have a beautiful base right here. Everybody see that? And right here. We see those, right? Two bases, pretty much at the same point. And price, current price is above this baseline. Therefore, this base that I've identified represents what? Support. And I'm going to make that blue. Actually, I'm going to make it blue just because I like the blue color for my bases. So does everybody see? I just found support and resistance. How many people just had a light bulb moment on how easy it was to find support and resistance? Now, mind you, I found this support and resistance. We're time frame traders. So one thing we always want to keep in mind is what time frame are we on? We're on the 1 hour. So now if I knew that this was a support line, and let's just go back and play devil's advocate. If I know that this is a support level and this is a resistance level, what could I do when price gets to this support line? Remember who controls it. What can I do? I can buy. Exactly. I can buy. I can take a trade. Exactly. How many people are around the world right now on this call can identify these bases? This one right here, my cabinet. Because
So,
current price, is this the one
yeah.
you're talking about?
Yeah, I see how you did the first one.
Right, the
And I
base.
saw the second one, but you called that resistance as well. But then when you came here, you came to the third one, you made that support. I get
Remember,
it.
it's
But
based off of where
wasn't that-
current price is located. Where's current price at? Current price right now is represented by this dotted line. You see that?
Yeah, I do.
And if the base is above current price, it's resistance. It's your ceiling.
Oh, so say it in slow English. Say it one more time.
If the base is above current price, it's resistance. If The base is below current price. It's support. Aha moment. I like that. Earl, hit me up. I got a book for you. Hit me up. I got a book for you. Great job. Great job to ask that question. All right. We give out stuff over here, Mr. Bean. Mr. Bean knows it. So great job. A base, I call a base my support and resistance area. It just gives you a way, John, to find support and resistance. So I call it a base, and people like that. They look and identify a base. Look at that. Even for me, this was my struggle. It's your ceiling and your floor based on where current price is located. How easy was that? Rob, look at him. See, I told you I was going to bring the heat today. Told you I was going to bring the heat today. How easy is for that for people to find? Does everybody now understand how to find support and resistance? Now, this support and resistance is only represented on the 1 hour. I want you guys to keep in mind that we're time frame traders. So if I'm trading on a different time, this might not apply to me because I'm on a different team. All right, remember, each time frame represents a different team. So right now you got the Packers, okay? The Packers might be the 4 hour, and right now I'm the Steelers, okay? I'm on the 1 hour. But the best thing about trading is you can go into other teams' locker room, right? You can switch your chart to find more players or better players to put on your team. How do I identify the 1 hour? Right here at the top, you have different time frames at the top here. You see this? 1 hour, 2 hour, and things like that, okay? If you don't have them, just simply click the little down arrow, the chart interval, and you can star it, and it will add them. So you see here, I don't have the 6 hour up here, the 8 hour. I can just star it, or it will add it to the chart, okay? So you just put a star on it, and it will simply add what the charts you need. This is the only time frames I need. Now, somebody said, why is it important that you know that you're on the 1 hour? Okay, so you can have more than one support and resistance point. Yes, Kendra. But here's the best thing that Donnie Pips is going to tell you when it comes to support and resistance. If you have support and resistance on multiple time frames at the same price point, what could that possibly tell you?
Very strong.
Powerful. Exactly. Every team is trying to get to this point. Every team has their buyers at that battleground point. Yes. So as right now, I'm on the 1 hour. And then I'm going to go to the 4 hour. Notice how I have this base also on the 4 hours. Everybody see that? And now look how price has held above this 4 hour point. Look at that. There's a battleground going on there. That is a strong point. So that's the floor, right? Price looked through the floor, but it pushed back and closed above it. And then ultimately, price, oops, gonna go to 1 hour. Price started buying back at the floor. Look at that. Price now is buying. Does everybody see that? Look how easy it was to find support and resistance based on current price. Wherever current price is located, and you've located this simple looking base, you have support and resistance. Now, sometimes it might not be simple to find that, but other times it is. Okay, and this is just a general overview. All right, guys, so keep asking your questions. I just seen one question. Is it better for the top or the bottom of the 1 hour? Carla, you're going to need to find both, right? Because trading, and now here's again another thing I want you to write down other than that time frame trader. Before you can take a trade, you must answer a question. All right, right now I'm giving you secrets that only certain people have. Before you can take a trade, you must answer a question. Here are the questions you must ask. Did I ID the trend? Right? Did I ID the trend? That's always first, because you're going to want to trade in the direction of the trend. Why? Because if you try to counter trend trade the market, you are going to get punished. Don't do it. You want to trade with the trend, okay? But there's going to be opportunities as you start learning the market to trade against the trend. Did I identify the trend? The next question is going to be, okay, do I have a buy line? Do I have a sell line? Okay. Can we answer this question right now? Give me a 1 in the chat if we can answer this question right now. Looking at our current price, current information, and I'm just going to go back 1. I have a support line, which is who controls it or who owns it? The buyer. So I have a buy line. Do I have a sell line? Why is this important? Because now I know that I can potentially take a trade from the buy line to where the sellers control the line at. How easy was that? I can now decide to say, you know what, Donnie? I want to trade back to where the sellers are in control at. I'm going to help the buyers by getting in with them, putting on a green coat. And now, as a gang, remember, it's now 1,000 because everybody on here, should I say 190? There's 190 people on here that all have recognized this is a buy line. So we're all going to take off our seller coats and enter the buy. So now we're going to start pushing the sellers back to the area they control. And once I push them back to the area they control, I can now get out of the market and make money. How's that sound? This is how simple trading is. Finding out where to buy and where to sell at. The Jets and the Sharks. There you go. Now, this is a great strategy, just trading support and resistance, right? So let's take a look. I'm going to go back a little bit further to here. Okay? As we see here, we have a buy line, right? We have a beautiful base right there. Price has created a base. Look at the top. We have a buy and a sell line, right? Price has created another base. Look at this. Current price, the dotted green line, is currently sitting at 117,296. I am Laura. I just came to the charts. I didn't see this candle close, but I do have a base, right? I do have a floor. Now, one thing about Donnie Pips, and I told you guys this, is that I have to mold you. This is a boot camp. So wake up. I'm going to mold you. Now, I had asked myself a question. Do I have a buy line right now? Current setup. Do I have a sell line? Yes. I just sat at the table and I want to be team buy. If I just came to the table, I'm not going to push the button, but I know that Ms. Bean sees this. I know John sees this. I know Kathy sees this blue line. So I am going to set a trade at this blue line, right? Remember we talked about this yesterday. Price is simply just going to come back. Remember, because this is my buy line. If I try to jump in the ceiling, if I try to jump right now and then jump again, I'm going to kind of look like a flopping fish, right? But if I wait for price to come back to where I feel comfortable at because I'm team buyers and I know I got reinforcements on this line, price is going to come back to this line. Then I'm going to push the button, right? And I'm going to take it to where I know the sellers have reinforcements at. So I can feel really good that I've got a lot of help. And this is how simple trading is. Waiting to identify this information. Price still buying. I'm okay with that. Price comes back down. Boom. What are we doing? Right, makes sense. What are we doing now? We're at our support line. Nope, we're at our support line. Nope, we're not selling. What are we doing? Price has come to the line. that we've
Buying.
identified as a support line, what are we doing? We're buying. No, we're not in a trade. We're buying. I'm buying. We're buying the market because we know who controls this blue line.
Buyers.
The buyers. Remember, we weren't in the trade. When we got to the market, we weren't in the trade. We're buying at the blue line, 117.094. Exactly, Ms. Kim. We're buying because we know what? What do we know? That other buyers see this line. There's 191 people on here. Around the world, it is a support line. Support is controlled by who? The buyers. So I'm buying. And just by knowing that the sellers control this line, I can at least push them back to where? That line. Watch what happens. I'm not worried about what price does right now because I don't know what price is going to do. And if a trader tells you, oh, I know price is going to do this, run. Donnie Pips, one thing about me is I'm always going to be 100% honest with you. Ask my team, ask my traders. That's how they've made millions. Hundreds of thousands of dollars. Bought themselves a new car with $200. One thing I'm going to be is I don't know what the market's going to do. I do know that I have a buy line. I do know that I identified what Donnie Pips calls a base, which makes it a support line because price is above it. And I did recognize another base because price is above it or below it. It's a resistance line. I can now trade between support and resistance. So as price comes back down, I'm not doing nothing but waiting. Now, here's the best thing about trading for my new people. You can set an alert on this line. How many people knew that? You can set an alert to let your computer or your phone know that price has come back to the point where the buyer gang controls. Right? So I'm going to put that there. And now that price has touched my line, Donnie Pips says, I am confident enough with more information that price is going to buy now because other people around the world sees this. Does the size of the candle indicate strength of the base? No, I'm going to get into that in a bit. Didum, you're just a little bit more advanced than everybody else. No. All right. Yes and no, but not right now. Okay. So now I'm going to push the button. I'm buying. Watch what happens to price. Price in the very next candle went up. And remember how we get paid. How do we get paid?
Is about price actions and pips.
Thank you. Price
And
actions and
pips.
pips. Yep, and pips. In pips. We get paid in pips. So from me pushing this buy button, okay, from my line, price shot up 232 or 36 pips. 236 pips. Now, for instructional purpose, Bitcoin is calculated a little different, but for training purposes, somebody do the math. Let's say that each pip was worth $5. What's $5 times 236? $1,180. I know other than that issue right now, crypto, when you trade Bitcoin the other day, how much did you make, Superman? On one trade. Not sure if crypto Superman is here. How much did you make on that trade? Taking that Bitcoin sell. I think just shy of $1,000. Look how he made a G. Look how easy that was to make $1,000. Did I need price to come all the way to the line to make $1,000? No. Based on your lot size, based off your teachings with Donnie Pips, you're going to have the confidence to say, okay, that's where I'm going to be at. But are you okay with this being $1? $1 per pip. How many people are okay with this being $1? What if it was just a simple dollar, right? What if it was just $1? Are you okay with getting in this trade?
Yes, because it's one more dollar than I had.
Exactly. It's one more dollar than you had. Exactly. So now watch this. Price still went up. And look at that. Look where it stopped at. Look where it stopped at. Good observation. Somebody said price created another base in the meantime. Yep, push the down button. It's so much easier when you know when to press it. Somebody said price created a base in the meantime. Great job. As price moves to the right, it's going to create new information. And I remember I told you guys this yesterday. One of the most important things. Trade the information. That was the first part. Second part is, even as it's changing, so now somebody recognized in here that, remember, this was our original setup. Right? This was our original setup. We recognized everything. And then notice on the very next candle, oh, 2 candles, what's created? And this gets to that question I asked about the second line. What's created as price is moving to the right? Another base. Oh, man. How many people now? This is really coming together. Resistance. Evans. There we go. Resistance. Another base. Does everybody see that? Now we have, how many people just had an aha moment? As price is moving to the right, price is forever changing the information. Remember, our trade was going from here to here. Does everybody see that? Our trade was originally going all the way to 117,683. Now, we might have to change or deviate a little bit. Yep, mastering just this information is major bank. Exactly. I now have a resistance line because where's price? It's below it. So now I could possibly say I am only going to take this trade from my base to the ceiling. And this is why some people see we say take profit 1 or take profit 2. How many people are going to take $249 if we're doing $1 a pip? How many people take that in a trade? Right. So this is what we would call TP1, take profit 1. And then there's a chance. There's a chance that price could still go here. And here's why I say a chance. Because as we get new information, market sentiment, people's feelings to greed, right, and scarcity changes. As we're trading, our feelings change. Remember, the market is emotional. It's based off of you and I, right? And with new information, the market changes. Therefore, people change with the information. Does that make sense?
Power 95.
Does that make sense? Doctor, I haven't gotten there yet, but I love your questions. Are you already part of Build, Doctor?
Yes, sir.
Nice. Miss Bean and Sam, if you're there, please take her information down. I'm gonna give you 7-day free one-on-one with myself. How's that sound? For asking those
Sounds
questions.
great.
Awesome. All right, you just won yourself 7 days free with me one-on-one. All right. Nice. I love her questions. Okay. And guys, keep asking. That's why this is a boot camp, right? You're learning the basics of making a trade. So now at take profit 1, watch this. Price comes back and boom, look how price stopped. Look how price stops right there at that resistance line and then pushed back by the sellers. Look how the sellers recognize that. Look how many people turned on us. Amanda turned on me. John turned on me, right? They recognized that that line was there just by identifying a base. They got out the trade. Right? They got out the trade. Now, just looking at this now, yep, them turncoats, right? We were all buyers. We were all, hey, hey. But guess what? People are not going to tell you they switched teams. It's like being at my mom's house. I started watching this show. I think it's called Big Brother. And I'm invested, right? Because I'm watching these people on one team, and then all of a sudden, come voting time, they're like, wait a minute. They're voting them out. I'm like, wait, what just happened? They're turncoating as they go into the room, and that's what happens in trading. But it's perfectly fine here. So we just made $249, you know, at a small lot size, and then price shoots all the way up. But look what price does. Notice how price came back to the buy line, giving you another opportunity to get into the market. So now, right now, I'm on the first floor. Right now, above me is the ceiling. If I run upstairs, well, I'm not gonna run upstairs at my mom's house. I'm gonna get yelled at. If I walk up the stairs and I go upstairs, what does the ceiling become? What does the ceiling become?
The floor.
The floor. I'm upstairs. I'm on the second floor. So now this is very important. Y'all see these blue and red lines? If a candle, right? These are candles. If a candle closes above the ceiling, the resistance, now becomes support. Team sellers got pushed out of their base. And as a buyer, as a Marine, I am in, and I'm gonna, you know, and again, I love everybody, and I love my Iraqi brothers and sisters. I'm just gonna use, you know, what I know. I'm in Iraq right now, and I'm fighting a war. Okay, I'm fighting a war, and they already have, and we take over their base, right? As we did. Why would I make a new base? Why would I make a new base? They already had one established. So guess what? We're just going to move all our supplies and our gear in their base. So in trading, the buyers took over this street, right? The gang members, they took over this street, and all they did was put up a blue flag and said, now we have a new staging point. So guess what? The buyers now have found a new entry to pushing price even higher if possible. Does that make sense to everybody? So if I wanted to now get in the market again, I can get in this base because this candle, the body of the candle, right? I didn't say the wick. The wicks are different. The body of the candle has closed above this base or resistance line. Y'all like bases? Y'all hear I use that word base? It's easy to identify, right? I start saying support and resistance. Y'all gonna be like, oh, where's he looking at? Base. Y'all see this pattern, simple base. Closed above. Yep, the body closed above resistance, making the resistance the new support. So what could I possibly do right here at this blue line?
Wait till the price comes back to it and do a buy.
Exactly. I can buy. Exactly, Miss Pat. I can potentially buy. What can I do at this line here when price came up here? Sell. Well, what if Michelle and John didn't get in the buy? They were saying, you know what? I'm staying with Team Sell, and I'm going to get in here. Well, that's perfectly fine, too. They waited, and they still made 174. What's $5 times 174? Remember, they're getting paid in pips. $870. All because they knew where to get in at. I knew where to stand on a platform. us New Yorkers, you can always tell. You go up to the platform, right? One, you minding your business, right? As we say here in New York. You get on a platform and you go upstairs. You notice there's 4 platforms. Where my Atlanta people at? Because this is bad in Atlanta. All right, you go to the platform for the train. There's 4 platforms, or should I say 5 platforms, but people are only standing at 2 of them. And there's a group at 2 of them. What does that tell you? What does that tell you? That all those people, you get up there, you get on the platform, and people are standing at just those 2 doors. Something is going on there, so why would you stand there? It don't work. It don't work. The train coming, and they already know that only those 2 doors work. Makes sense? Now, that's the same concept of the market. I know that this is a baseline. I don't know what's going on in here. There could be buyers, sellers fighting a war in here, but I know that I'm safe in my base. I'm safe in a tank. Everybody's here. I'm not charging the front lines by myself, but I'm charging with everybody else. I'm going to wait here where everybody else is waiting at. I'm going to wait here where the sellers are waiting at. Does that make sense when it comes to supply and demand? I'm sorry, support and resistance. Does everybody now have an aha moment of support and resistance? Watch what price does. Let's see. Mind you, and I just chose a random point in time. Price bought above. So technically, this would be a buy line. This would be a buy line. Okay? Technically, this would be a buy line. All right? So we have a bunch of buy lines. Now, everybody see what just happened. We got 3 buy lines, right? Prices above, there are 3 support levels. Okay? Question from Dale. Does it have to be a full candle busting through the first resistance line? As long as the candle closed through any line, Dale, of a base, it flips it. It turns it to a resistance or a support line. So it doesn't matter. As long as the candle closes above, as Mr. Cheek said before. If a candle closes above, it will automatically flip it. I'm motivated and all in with building. Yes. Right? So no matter what happens, if this body, not a wick, if the body closes above, it automatically turns it into a resistance point, okay? Or a support line, all right? Dale? Any first candle that closes above it, don't matter if this line is poked by multiple wicks, doesn't matter. That first candle flips the line, okay?
Thank you, sir.
No problem. All right, so now, that was one way to identify support and resistance. There's a second way. The second way, scholars said, just clarify, we deal with body bases and not the wicks. When it comes to flipping a support or resistance line, we deal with the body. Yes. Okay. Yes. All right. Yes, Brandon, we do have segments where it just goes over support and resistance, trend, and thing like that. Okay. So now everybody sees the body, right? Price is up here. It's closed. The candle has closed. The body has flipped this resistance line to a support line. Now, the other way to identify support and resistance is by finding what we call current highs and lows. So the first way to identify support and resistance is by identifying a base in the market. And a base is nothing more than the close of a sell candle with the open of a buy candle, or a buy candle close with the open of a sell candle. I'm going to get into that, Evans. Great question. I'm going to get into that. That's what I'm about to go through. Okay. The other way is by identifying current highs and lows of a wick. To find support and resistance, we look for the current high and low of a wick. And I'm going to show you. Okay. Does everybody have this information? Just want to make sure. Okay, and I'll bring it back up in a minute. All right, good. So I'm just going to remove these lines real quick. All right. Everybody learning some stuff. We keep growing on numbers, Mr. Bean, so I'm seeing everybody's engaged.
Through the roof.
Right. So now, right now, we always start at current price. So anything you do, you're always going to find where current price is. So anything you do, first thing you do, find current price. Notice how right now, the top of this wick, if I look to my right and my left, there's nothing there. There's nothing equal to it. Everybody see that? So on the 1 hour, right now, remember, time frame traders, so the information can be different if we go to a different time frame. But on the 1 hour, we recognize that this is a current high. There's nothing to the right or to the left. So this represents, and prices below it, this represents a resistance line. Everybody see that? Perfect. Now, we recognize here there's a big cavity. This is called a cavity. A big space in between and a big space to the right is called a cavity. We recognize that there's nothing there, therefore this is a low. Everybody see that? Nothing here, nothing there. It's the lowest point. It's a low. Everybody tracking? Give me a one in the chat if you understand. Perfect. Got everybody to understand. Now, and this is why I went backwards. This is why I started this before I started the trend. The market is trending up. And as the market is trending up, it's going to create new highs. And the market trend is kind of going to look like this. Okay? In an uptrend, okay? Yep, trend is your friend. In an uptrend, the market will create new highs, but never new lows. Okay? We call them higher highs and higher lows. Okay? And he says, well, Donnie, what does this have to do with support and resistance? A lot. Okay? Not on there yet. Not even talking about the fib yet. Okay? Kind of stay right here with me and then we'll get to the fib, all right? So in an uptrend, the market will create highs, but never new lows. And here's what I mean. Okay? Man, I love trading. As the market is moving up, it's going to create structure. Notice here we have a low. Okay? And I'm going to call this my low. This is my low. As the market moves up to create the high, right now we have a downtrend, right? Everybody see that? Market was moving down. We have a downtrend, and then we have a base. Everybody see this base? Resistance, right? This is why this is so cool. We have a low. As the market pushes up, resistance line still working beautifully, right? Everybody see that? price now closes above this resistance point. Okay? And I'm going to come back to this. Making this a base. Oh, we definitely shot up. So now in a downtrend, as the market reverses, when the market closes above its previous pullback, we can possibly look for a reverse. And I'll explain that in a minute. So we look at the market, still pushing up. The market has a pullback. Does everybody see that? We had 2 bullish candles, and now the market has a bearish candle. Does everybody see that? This is called a pullback. But notice how there's a cavity in here and here. So now we have a high, or you could have used the previous line, right? Highs and lows will change based off of a wick. Highs and lows will change based off of a wick. So now we have a high. Depending on what happens next, we could possibly get something else. Let's see what the market does. Oh, market drops. Market pushes back up, pushes up, pushes all the way up. Okay? Notice how the market pushed up and then pulled back. Does everybody see that? Everybody see how the market pushed up? We have a low, we had a high, and from that high, there was a pullback. Does everybody see that? When the market does that, and again, when the market does that pullback, okay, there could be many factors that cause that, right? When the market pulls back like that, the market has now created a higher low. Because remember, we have a low, we have a high. This is known as the start of the movement because you can only have one high and one low. After that, we now have what's known as, because it's a pullback, beautiful pullback. Everybody see that structure? Right? Little cavity, little space in between, nice pullback. There's no other wicks, nothing here to the right. This is known as a higher low. Now, notice how price, as Victor just said, broke through my high line, right? My resistance line, creating what's known now as a higher high. Everybody see that? Everybody see that? See that information? High line's still there, right? My high is still here. Because this was my starting point. These lines are now used as support and resistance. So as the market is trending up, it gives us an idea of where we can get in the market again. Does that make sense to everybody? Just by identifying the highs and lows. By identifying the pullbacks. So let's see what the market does. And now I do know that we do have a base here, right? So I am, because we are working on support and resistance. There is a beautiful base here. This was at one point a high, but it got omitted. And I'm going to make it blue just because it's a base, right? So now price is up here. Yep, our floor and our ceiling. Yep, resistance. So we have a bunch of places we can enter at. Does everybody see this? I'm going to leave those. I'm going to make this blue because we're using blue as our entry. With that being said, I have potential spots that I can get into the market. Look at that. What is the difference between a true low and a low and true high and a high? There's no such thing as a true low. It's a starting point. Okay? It's a starting point. Yep. So your job is, if we know that the market is going to trend up, we can enter at our higher lows. We can enter at our highs. Right? We can enter at any point that we deem other buyers have recognized. Look here. For example, this was our previous base. This was a resistance point, but the candle broke through it, creating a new higher high. I also want to point out that this new higher high is also all-time high. And that's important because when price hits all-time high, price typically reverses. All right, so that's very important. Anytime price creates a new all-time high, price typically reverses. Thank you for the pre-K breakdown. This is how I teach. I teach like a sloth. I teach until you understand it. Okay, I've been doing this for over 15 years. So I can enter a buy here, right? Buyers control it. Watch this. Watch what happens when price comes back to the first baseline. Boom, look at that buy. So that buy, just by playing the first initial buy off the market, price shot up 502. What's a dollar? That's 500 bucks at $1 a pip. Do you see how I'm teaching you guys a simple concept of entering off of just support and resistance? This is only the first, this is the basics. Notice Mr. Bean didn't say we're gonna charge him $5,000 a class for this. Donnie, I heard there was a scuttlebutt that there was a 3-day live course for this with you and Mr. Bean in Miami. Oh man, here we go with the canal. I'm gonna delete you. Stop sending me private messages. It's in the works. Me and Mr. Bean just have to, we have to get with the powers that be, okay? But we'll mention that down the road, man. We just starting. Give us some time. All right, let's get y'all the products in the house first. All right. So now, as price comes back, it's still held. Look at that. Price stopped there and closed. That means people got out the market. And look at that. Came to the next support line, the next previous high. And that was a nice buy. That moved 101. How many people take $100? How many people take $5 times 111? Right? So let's see how price reacts. Oh man, it still went up. So now this became a resistance line again. So now you see this. See how price closed above it and now closed below it. It turned it now to a resistance times. How many flips was that? How many times did this turncoat or this base get flipped? Nope. Look again. Nope. Only thing that flips it is the candle closing. If candles close through it. Two. Trading is done in the power of 3 based off the E3 strategy. Trading is done in the power of 3. It's like Charm. I think that show was called Charm. 3. If a baseline or a support or resistance line flips 3 times or more, get rid of it. We don't need our charts to be looking crazy, right? We need a Picasso, right? Picasso's that's a bad example, right? I need something a lot better. I don't need all these lines still. It's been broken 3 times. The base has been destroyed. We done fought over it. Bullets going in it, grenade, frag in, grenade out, all this kind of stuff. The base no longer is any good. There's too many holes in it. Right? So after 3 flips, a baseline is very weak. So be careful leaving it. It's been flipped twice now. This guy is very weak. But this was a good buy. It bought from here to 239. How many people would take $239 by just knowing where to get in the market at? Do y'all realize that this is the basics still? Like, this is the basics. 193 people on here. Do y'all realize that right now I'm teaching you the basics and how easy it is to get in the market just off the basics? Told you guys, I bring the energy, I bring the fire, and my thing is, and that's why I excuse me for saying this, I can't stop talking about my relationship with Mr. Bean. Because we want to get to point A to point B with simplicity, but mainly for you guys. So now we've bought off this line. Watch what price does. And again, keep inviting. I'm here for another hour, right? Look at that. Look at the buy off the line. Look at that. By recognizing the high and the low as the market is trending, we're buying. Somebody just asked me, says, Donnie, if the market is trending up, should I only be looking at buys? All right, everybody look at me right now. I don't care what rank you are, who you are, look at me right now. Buying is not a multiple choice test. Trading is not a multiple choice test. So if you look at your trades and you realize that you've just taken all buys, don't think I need to take a sell because I took all buys. So if you look down at your winning trades and you say, well, man, I've taken all buys, and now all of a sudden you're like, oh, I feel I have to take a sell. No, you don't. It is not a multiple choice test. Does everybody understand me? That's a yes, sir. All right. My job is to mold you to make a profit here with Build International. So I don't want anybody to come to me and say, well, I took 5 buys and now I took a sell and just lost everything I made. Trading is not a multiple choice test. If the market is trending up and I feel comfortable taking the buy because I was able to answer the question, you take the buy. Okay? Everybody tracking on that. So now look at price. Price is still being held up by this base. Remember, 3 flips, it's done. But we notice price created another base, right, at the top. It says, well, I got a few lines on my chart. These lines represent money. Money. And we're still talking about highs and lows with support and resistance. So everybody seeing this can recognize how to get into the market. Price has closed above this. This now is gone. I have deleted it off. He has been broken 3 times. That base has been destroyed. Right? So people looking for sells right now can't look for sells right there. It is done. Right? But it held. Right? But I'm not playing it. And as we see, look what's happening to current price. Buyers still in control. New baseline. And then look how that line held. Does everybody see that? As we move to the right, now we notice price is kind of consolidating, but it's consolidating off of what? That previous high. Look at that. All this doing is just moving based off of price action from a high in the market. Does everybody see that? Dale, is it starting to make sense to you? And here's what I always say. My mom used to say, if it ain't broke, don't try to fix it. Has that line been broken 3 times? No. So somebody just said, I noticed, and thank you guys, but put your questions directly in the chat because your question might be a question that somebody else has. They're just scared to answer it, okay? Or ask it, excuse me. All right, so put it directly in the chat. Don't have to send it to me. You know, thank you for having the courage to ask me, but put it in the chat. Okay. The only stupid question is a question not asked. Okay. And that's how I made my money, by asking a lot of questions. I drove Dr. David Paul crazy. Okay. We're going to get into that in the last segment, Gage. So now somebody said to me, Donnie, I noticed that in the interim of price moving to the right sideways, it created a higher base. Right? Are these two lines in the vicinity of each other? These two lines right next to each other? Mm-hmm. Yeah. Mm-hmm. Yeah. Can I get rid of the older line since it created a new kind of higher line? They're right next to each other. Yeah, go with the new base. Get rid of it. But now we noticed there was a pullback in the market. So we have our new base. We got rid of the old one. There was a pullback in the market, creating a new support line, but most importantly, creating a new higher low. And Downey keeps doing that. Look at that. Beautiful pullback, right? Nothing to the low. The market created a new higher low. And remember what I stated before. The market will create new highs, but never new lows. Because here's our low. Y'all see that? Yep, we're looking at the 1 hour right now, but doesn't mean the trade is completed. Jamal, there's no such thing as a trade being completed. Our trade that we're in is completed, but the market isn't completed, right? It's in an uptrend. So everybody see that, how the market uptrend? And just to show you the pattern now, y'all see that beautiful uptrend and how the pullback creates higher lows? So remember, must be a pullback. Must be a pullback. Watch this. Excuse me. Remember this line I drew right here? Market would push up, create a high, pull back, create a higher low, create a higher high, right? So this is our higher high. Create a higher high, pull back, create a higher low, and then create a new higher high. Everybody see that? Watch this. Remember that line chart I told you guys about? Look at that. So if the market is trending up, I can potentially find the pullbacks by potentially looking at the line chart. This is a little bit more for my advanced students, but it's just something I wanted to show you guys. The market is nothing more than a line chart being able to be read based off candlesticks. Y'all see that? Donnie, do I have to use the base or the low of the wick as a support or resistance line? You can use both. You can choose which one you want to use. Remember, it's your trading style. I'm just showing you how to identify support and resistance while the market is trending. Are you pre-selecting exit points? No, they're already selected, right? If the market, Jamal, has created resistance for me and I found my bases, right? Did the market not pre-select my exit points? Because remember, we have to, before we get in the trade, we have to ask a simple question, right? Did I identify the trend? Do I have a buy line? And do I have a sell line? If you can answer that question, you have now pre-selected your exit points. Because if I'm in a buy, where am I getting out at? No, it was a great question. If I'm in a buy, where am I getting out at?
At the sell line.
At the sell line, exactly. And if I'm in a sell, where am I getting out at? If I'm in a sell,
At
where am
the
I getting
buy
out of the
line.
Line.
At the buy line. Do you see that, Jamal? Does everybody see that? I see some of you guys had that aha moment now. Like some of you guys were sitting here like, oh my God, right? I'm not going to understand this. Y'all see how simple Donnie Pips has made it? All right. And this is why the best of the best has come to build. All right.
So the buy line is the resistance line?
The buy line is the support line at the bottom, right? If price, remember what I said.
Oh.
If price is below current price, if the line is below current price, right? If the line is below current price, it's a resistance line. If price is above current price, it's the floor. It is your support line. You see that?
Yes.
I'm not sure if you were here when we started that. Yep. Ceiling, floor, right? Floor, ceiling, depending on where you're at. If I close above it, it becomes support. So now, all-time highs and new highs. New highs can create a reversal pattern. New highs can potentially create a reversal pattern. What did I just say?
New highs.
New highs can create a reversal
Pattern.
We call them double tops. This is one of the most important things you guys are going to learn. When price came to the all-time high or a new high, we're sometimes typically looking for price to reverse. Okay? So therefore, if I know that I'm at all-time high and price closes above this, am I looking for more buys? No, because there's a good chance price is going to reverse. Okay? So as price comes to this all-time high or any high or low, I'm looking for a reverse. So anytime price comes to a high or a low, I am looking for a buy or a sell. So if this is my higher high, I'm looking for a sell, right? Because it's higher high. If this is my higher low, I'm looking for a buy. It's called a double top or a double bottom. It is the best way for you to identify if price is going to reverse or not. Okay, does that make sense to everybody? So as you can see here, I have a high. Here I have a low. I'm just going to get rid of this baseline just so my chart's not crowded. I have a higher high and a higher low. So ultimately, I'm looking for a buy here. I'm looking for a sell here. Okay, and just for instructional purposes, I'm just going to remove that baseline. You guys know it's there. And watch what price does. As price comes up here, I might potentially be looking for a sell, okay? Price moving sideways, boom. Price has hit my higher high and all-time high. So typically, what am I doing? What type of trade am I taking? What type of trade am I taking?
A sell.
So let's say I take a sell here, right? Let's say I take a sell here. Notice I had a base here. I'm not going too far, but that's a good sell, right? I have a base there. And I'm using what's called the long and short position tool. The green represents my profit, okay? So I'm looking for 241 pips, right? And again, for instructional purposes, I know we're on Bitcoin. I'm just calling them pips for now because that's what we went over. And let's say I'm just going to set a generic stop loss, right? Look at that. Look at the reversal on the double top. Look at that. Look how price just slams down like butter. So highs and lows can be used as reversal patterns. So if I've recognized that this is my high, especially all-time highs, and I've recognized that this is my low, I am looking for price most likely to reject off that point. Because as price moves in an uptrend, price is always creating higher highs, but never new lows. If price does close below a low, there's a good chance that price is now doing what? Trending down. Okay? Trending down, reversing. So this is the reversal point of the market right here. We have a beautiful uptrend. If price closed below here, we could potentially see the reversal in the market, the downtrend, right? Perfect. So let's just take a look at our support and resistance. I have a base here, right? I have a base here that's already flipped 1 and 2 times, pretty weak, okay? The base there. I have a new base just above me, okay? And this is a resistance line. And just by trading support and resistance, is it smart to sell all or a percentage when it comes time to sell? Marquise, when it comes to Forex, we're just simply going to push the button depending on our confidence level. You don't want to wager your whole account, right? But with Forex, you can decide how much you want to make per pip, okay? That's the best thing about Forex, all right? Look at that. Price bought off the buy line, sold off the sell line. Y'all seeing how easy this is? Everybody seeing how easy this is? By just identifying, saying, Donnie, just by identifying these lines, I can possibly buy and sell in the market? Yes, look at that. Right? Price closed below it, came to the next buy line. This line now flips. And price held, bought off the back wall. Look at that, double bottom. And now we have our targets for our exits for our buys for team buy. Look at that. 1, 2, 3. I'm going to remove this line. Yep, I'm not getting into fair value gaps. That's more of an advanced stuff, Natasha. So I don't mention those, but yes. Okay. Notice that this line has been broken twice, but it did create a lower base. Price came back to a buy line. Right? Broke this buy line. 1, 2. So I got, oh, this is only the first break. Still got my low. Price is still holding. Right? Buy, price close below, flipping this. Now, here's what's very important about trading. What traders aren't going to tell you. Donnie, I entered this buy. I entered this buy, right? Let's say you entered this buy and prices closed below your buy. You're in what's called drawdown, right? So you're in the negative, okay? You're in drawdown. Now, when it comes to proper risk management, you're going to set what's known as a stop loss. That means at a certain point, if you're losing the trade, it's going to close you out. You can set that stop loss at any price. You can set it at $20, $25. It's up to you. What I tell traders is trade what you're willing to lose, not what you're willing to gain. Trade what you're willing to lose. Okay? How long do you stay in a trade on the 1 hour? Do you simple use TP 1, 2, and 3? Yes. There's going to be some take profit rules to that, Doctor. But simple. So my price hits my target, and your rules are going to say that. We're going to go over that in just a minute. So now I'm in this trade. If you got in the trade and the trade is below your line, but you're playing the buy and it hasn't hit your stop loss based off your rules, right? Those rules again, stay in the trade. Stay in the trade. You made a conscious decision to say, I'm team buyers. You got in the buy. Here's where people go wrong. Price closes below their entry and they close out their trade in a loss. How many people have done that? And then all of a sudden, price has gone in the direction that they would have been in major profit if they would have just stayed in the trade. How many people have done that? Jabari? Right, Michelle? How many people have done that? Let me tell you something. Once you're committed to the trade, you're in the trade. Does that make sense to everybody? Remember, I told you, you guys are going to learn something very useful today and yesterday. Once you're in the trade, I chose to get in this trade. I'm in the trade. I'm not this type of trader that's going to lie to you and be like, close it out and go. No, I don't know what the market is going to do. But what I do know is that I was confident enough to enter the trade. I'm confident enough to sit here and draw down. Right? And depending on where my stop loss is set, if price has not hit my stop loss based off my rules, I'm in this trade. So as price starts moving, right, I'm okay with the market. Now, the market is creating new information. Now, let's say this was my stop loss, right? Price has hit my stop loss because price created a new low. Here was my higher low. Price does create a new low. Look at that. And I haven't gone into stop loss strategies and stuff like that, but that's kind of where my stop loss would have been, below the second information, or here. Price would have cross taken me out, but now that's still a buy line. Now look at that. Crazy on how the market is playing off of all our lines. Now the market is creating new lows. Look at that. Meaning we could possibly now be in a what?
Reversal.
A reversal, right? Now, what would have been our first sign? And this is a trivia question. I don't want any of my students to answer this question. You know who you are. What would have been the first sign that we are in a downtrend? Looking at my chart. I want you to really look at my chart. What would have been the first sign that the market was possibly going to be in a downtrend or reverse? Nope, John, look at my chart.
About three restrictions.
Amanda. What do you mean, Amanda? Amanda Dixon, what do you mean? You can open up your mic.
The blue line, it goes like above the candlesticks. So the candlesticks are going down and the line is above it.
Awesome. Amanda, you just won yourself a 7-day free with me.
Thank you, sir.
Nice. Yes, that was our first clue that price was possibly in a downtrend. It closed below that 20 moving average. Remember I told you guys about that moving average, right? I left it on here for a reason. Price told us we're in a downtrend because we are below the 20 moving average. So that was the first inclination of the market helping us to say, hey, we're in a downtrend, Donnie. We are below the 20 moving average. So you don't have to kind of guess if the market's going to turn around on you. Make sense? Now, when price is creating new highs, right, and pullbacks, we know we want to get in on that high or those pullbacks, right? We have entry points here, right? We have entry points here, right? We have entry points here, and as the price pulls back, right, it bounces off that entry point, and then same thing, right? We utilize those highs and lows or those baselines as entry points when the market is trending. Does that make sense? The 20 moving average is simply the average of the last 20 candles on the time frame you are on. Right now we're on the 1 hour. So these candles represent, the moving average represents 20 days or 20 hours. From the daily, 20 days. Now, the 20 moving average or any moving average is utilized as support and resistance. If price is below the 20 moving average is used as resistance. Therefore, we're looking to take a sell off the 20 moving average. If price is above the 20 moving average, the 20 moving average represents support. So when price comes to the 20 moving average, we can simply take a buy off the 20 moving average. Does everybody understand that? So one of the first tools that everybody is going to use is the 20 moving average. It's amazing. And for my people who like to scalp, you can trade from moving average to moving average. I have a strategy that you guys are going to see where you can enter the market on one moving average and go to another time frame and exit the market on the 20 moving average. Yep, depending on what time frame you're on, Ivana. So if you're on the 5-minute and you're above 20 moving average, you're in an uptrend. If you're on the 30-minute and you're below it, you might be in a downtrend. Okay? So it depends. So now, as price does all this, we kind of understand how to identify support and resistance, right? We can just look for a base, right? We're here. We see that the market has created, oh man, this was the previous base. It's only broken one time. As the market moves to the right, so can your baseline. So you don't have to stay here. You can now come here, and as you guys see, your breaks in moving averages may change. So look how perfect this is, but I still have one break, right? I still have one break. But now look how price created a new baseline here, and notice there are no breaks in between. So how many breaks do I get now? 3. Okay. Marquise, I will be explained after the course. All right. No, Well, I don't, Natasha, different strategies. I teach it, but I don't use it. All right. I don't feel it's needed, but I do use the 10 MA. Okay. We call him Jerome. You're going to get real comfortable with Jerome. All right. So look at that. So now I have no break. So now this is now stronger than it was back here. So if a line is right next to a new line, remember, you're trading the information as it's being printed. Okay. You are trading the information as it's being printed. Okay. Newer lines, stronger information. Older lines, remember, they're weaker because it's been broken one time. All right. His heart has been broken, so he's a little weaker. This guy's new. He's created a beautiful base. Nice. All right. Lastly, or not, should I say not lastly? I am now going to go over my favorite, supply and demand. Supply and demand. I am now going to go over supply and demand. We knew that support and resistance was based on a price chart where price stopped moving down and price started moving up, right? At that price point. Okay. So we knew that this was simply information. Now we're going to talk about support and resistance. Sorry, supply and demand. Ooh, supply and demand. I need some more coffee. Okay. Let's talk about demand. Well, what is supply and demand? What is supply and demand? COVID happened. Donnie Pips owns a medical supply company in Miami, Florida. I don't think before COVID I had more than 80,000 a year in sales. All right, I'm just being honest. I think my best year in sales was probably, I think, almost 92,000 for the whole year in sales. You know, you don't make, you don't keep all that. COVID happens. They're just, before COVID, there wasn't a demand for face masks and gloves and things like that. So all the big companies were getting it, right? Prices are low, right? There's not really a need for something. All of a sudden, COVID happens, and then boom, there's a need for face masks, gloves, and hand sanitizers, right? Everybody knew the craze, right? All of a sudden, price shoots through the roof. One case of gloves has 10 boxes in it for my medical staff. One case of glove has 10 boxes in it. That one box might be cost before COVID $185, right? 10 boxes in there, $185. You do the math, right? COVID takes off, and now all of a sudden, that one case of gloves with just 10 boxes in it now cost $1,800 to $3,000. Now, here's the other side to that. There weren't a lot of sellers, and this is where it ties into trading. Wasn't a lot of sellers. So who do they come to? They come to the little guy. And overnight, we start making hundreds of thousands of dollars in orders. Overnight, literally. We've got people calling us we never thought would have called us. And they're asking for face masks, they're asking for gloves, they're asking for everything. And here we go. We're in the millions of dollars in sales. Because there was a demand for a product. The buyers came in and said, we now are going to take over the market. Buyers did that. So it created a demand. A demand is an area where price is selling. And then all of a sudden, the buyers come in and take over. So I'm doing good for a while, and then all of a sudden, here comes China. Well, everybody knows what happens when China gets involved, right? They make it look good. I can't lie. They make it look good. Now, all of a sudden, China's now selling face masks, and they got the Gucci symbol and the Louis Vuitton mask, and right? And now they're being sold on West 125th Street for $3. Right? Because Chinese have a mindset that make everything in bulk and sell it for $1, and that's a great concept. If I can sell 1 million at $1, I made $1 million. That's a great concept. So they start lowering prices because now everybody is selling face masks and gloves and hand sanitizer. So what does everybody else have to do with their prices now that China has gotten involved? They have to lower their prices. So now there's too much supply and not enough demand. Does that make sense to everybody? There's so much supply that China has flooded the market. There's just not a demand for what Donnie Pips is selling at $1,800. So the price must lower. So the sellers have come in and take over, and that's supply and demand. Demand is where the buyers outweigh the sellers or the product being sold. In this case, the product being sold is Bitcoin, right? So that raises the price. Demand is when the buyers outweigh the sellers. Supply is when the sellers, right? We got a million sellers. Everybody on the block selling the same face mask. And you only got 30 people on the block, but yet you got 300 sellers. Supply is where the sellers outweigh the buyers because the price is too high for the demand. Does that make sense to everybody? Not saying that they don't want the product, not saying that the price can't go up, but at that point in time, the buyers aren't willing to pay that price. Therefore, it drops the price. Well, Donnie, how does that equate to me making money? It's simple. It is very, very simple. Demand, and I'm going to write this down so you guys can see it. There we go. So just like that. Demand is simply this. This is how we represent on a price chart, right? A bearish candle followed by and supply and demand. Okay. Yep. Supply and demand is the name of the game. Okay. So a bearish candle followed by an exaggerated candle. Candle or movement. Movement. All right. The word movement is represented I spelled that. Represented by multiple bullish candles. The exaggerated candle or movement candles must be are represented, we'll say represented, right? By 50% or more of the bearish candle. Watch how simple this is. So a demand zone, right? Demand zone or demand, right? A demand zone, sorry, is a bearish candle followed by an exaggerated candle. What do I mean by exaggerated? I'm talking, it done shot to the roof. That's exaggerated, right? Everybody done seen Blank Man with the Wayans, right? And exaggerated, right? He's like, I'm gonna slap you around and call you Susie. It must be a bearish candle followed by an exaggerated bullish candle. Yep. Or movement. I'm going to do that. Yep. So now let's find a bearish candle. Okay? Because there's one more part to this. Look here. Notice how I have a bearish candle followed by an exaggerated candle or movement. The word movement represents multiple candles. Okay? These, I don't have an exaggerated candle following after. Okay? But I do have movement. 1, 2, 3, 4. Right? I've got 4 candles followed by a bearish candle. Right? Everybody see that? The movement of the candles or the exaggerated candle must be what? Must be what?
More than 50%.
More than 50%. Okay, so the last part of this is the demand zone, right, is represented by the body of the bearish candle. Now, I know people use wicks and stuff like that, right? For the E3 strategy, I only use the body. Here's why. I want us to get into the market with as little bit of drawdown as possible. How's that sound? I want you guys to come in and boom, okay? Okay, it's beautiful. So watch this. I'm going to go just through this simple information. A bearish candle. I've identified my bearish candle. Followed by an exaggerated bullish candle. I don't have that. Or movement. The word movement represented by multiple bullish candles. That's more than 50% of the bearish candle. So let's do the math. Here's one way you can do the math. There's a thing called the Fibonacci tool. Okay? There's a thing called the Fibonacci tool. In the Fibonacci tool, it has numbers. Okay? And this is how we're going to measure it. We don't measure the wicks when we're measuring candles. Why? Because there's no money in wicks. Listen to what I just said. There is no money in wicks. Okay? So we're going to measure the body of the candles. We're going to go, if it's an uptrend and we're looking for a demand zone, we're going to go from the base of the bearish candle, the base of the bearish candle, to the top of the base of the final bullish candle in the movement. Okay? And I have a cheat code. You can take out all these numbers, okay? So you don't have so many lines. And then you can save it. I have it saved already because the only thing I need is the 50% line. Does everybody see my chart? Does everybody see my chart? See how I have the 1 at the bottom, and I'm going to go right to the base, and I'm going to go to the base of the top of the last bullish movement candle. Is this movement more than 50% of the bearish candle? Not worried about order blocks right now, Gage. Stay engaged. Stay here. Focus here. Okay? We don't care about order blocks in Forex. That's the best thing about Forex, okay? Something you're not even going to worry about. So does everybody see this candle? It's more than 50%. Pretty cool, right? Therefore, the demand zone is represented by the body of the bearish candle. How do we identify the bullish candle? Obviously, you see they're green, right? Bullish candles are represented by green. Thomas, I started that at the beginning of the class. So bullish candles are represented by the green candles, okay? Our demand zone, and over here, you have tools. Please utilize your tools. I'm going to go and get a rectangle. And I'm going to rectangle off that bearish candle, only the body, right? Only the body. So I'm going to take my rectangle tool and I'm going to move this to the right. Does everybody see that? I'm going to change this color. And you can save templates and things like that, right? Okay, to make it what you want. I've made mine green with a yellow line. I'm very OCD. Why is this important when it comes to demand zones? Let's talk about this. And what makes a demand zone different from a support or resistance line? Or should I say support? Because support and demand are kind of the same thing. Repeat, did you measure from the open or close of the bearish candle? Michelle, from the bottom. The close of the bearish candle, the bottom, from the close of the bearish candle to the top of the close of the bullish candle. Okay? Always the bottom, always the top. Okay? The demand zone here. A demand zone is an area where buyers took over. Look what I said, buyers took over. If we know as buyers we took over that location before, right, the team buyers, or should I say army buyers, if we know we took over that zone before, we're going to place new supply there, new orders, right? As I say supply because it's our base, okay? And this base is stronger because now instead of just supplies, there's people there. And buyers recognize that demand zone is there, that they took it over. They're going to place new orders, okay? So demand zones are where new orders are placed, which means for you and I, guess what? If we recognize a demand zone there, when we jump out the plane, where are we parachuting to? Our base. So when it's time to sneak back and surprise the sellers, there's 1,000 people here. Does that make sense to everybody? Sellers knew that before the buyers took over here, but they didn't know how many buyers were here. Now, people are placing orders here, placing orders there, putting orders in here, putting orders in here. And now it's strong, right? So when the sellers come back to this base, they're going to be surprised because before they only knew there was 500 people there. But now all of a sudden, there's 10,000 people here around the world that recognize the demand zone. So they put on their buyer coats and they waited. They waited in and lurking in this area. Does that make sense to everybody? That's how demand zones work. They're new orders. They're fresh new orders that have come into the market. The buyers are about to ambush the sellers. So if I can recognize this demand zone, and y'all see how simple I did that? With just a simple step right here. Right now, we're not worried about the 20 moving average. Don't worry about that, okay? We're just worried about the demand zone, okay? As price comes back to this zone, in my movement, price went even higher. Did y'all see that? Does everybody see that price? Price went higher. Well, guess what? Because there was a bearish candle in between the push up, you cannot use anything after the bearish candle. So when looking to add candles to get that 50%, because you want that 50%, you want to try as hard as hell to get that 50%. Excuse my French, right? You want to try so hard to get it above 50%, right? Because you want that demand zone. Trust me. But once you get a bearish candle, it breaks structure. You cannot use anything above it. Does that make sense to everybody? You cannot use it for your count. So I can't go all the way up here because the sellers came in and broke our line. Okay? They broke our supply line. So I cannot use it. My supply line stops here. But it doesn't mean this is not a demand zone. right? So new buyers are there. Price is doing its thing. Guess what? You're waiting. You're not at the market. You're waiting, and price is going on. Now, here's the best thing about supply and demand zones and the market. We never know when price is going to come back. I don't know. You don't know. The market movers don't know when price is going to come back. All I know is when price does come back, I'm sitting and waiting here. So the war is going on. Mind you, this is only 1 hour. So we see from the time it was created, right? We waited 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So 23 hours it took price to come back to our base. And look at the buy that we were able to take with confidence, because trading, you must be confident. Almost a day. But Sylvia, are you okay waiting a day to make $1,000, to make $3,000? How many people on here right now are okay with waiting a day? Yep, me. Right? Look at that drop. And we're gonna go over that drop as well. So as price comes into that demand zone, look at the buy. Look at that. Price bought and then sold in the demand zone. Right? That was a beautiful buy out of the demand zone, 876. Do the math, $5 times 876. Where price still closed inside the demand zone. Remember, what's going to be important in this instruction is going to be closed, $4,000. Look at that. Scholar, I'm going to go over how to determine your best, but that's in the course. I can't give out everything today, brother. But trust me, you'll see that. Okay? Price's demand zone is still good. So we can still take this buy, right? Price closed in it. I'm in this buy. I'm going to take the buy. Boom, look at that. Bought right out of the demand zone. Look at that. So just by finding the buyers, we're able to get in the demand zone. And look at that. Look how easy this is. Supply and demand is going to make you a lot of money. This is how simple the basics are. Okay? So now we've represented right? And I love drawing. I have all this already done, but I like for you guys to see it in real time. This is an exaggerated candle. The only thing that makes it an exaggerated candle is that it's already 50% of the bearish candle. Make sense? That's what makes it an exaggerated candle. So if it's already 50% of the candle, you're fine. Okay, if we look here, bearish candle followed by one bullish candle. If that one bullish candle, exaggerated candle, is more than 50%, it makes a what? See one candle? It makes a what? A demand zone. Look at that. Look at that. Look how price came back and touched this demand zone for buys. Look at this. Oops. Look at that, guys. Look at the demand zone at the bottom, and price, because we recognize it was a demand zone, look at the buys off of this location for Bitcoin. Look at that. Does everybody see that? Just by finding a bearish candle followed by a candle that's 50% bigger, more, we can enter the market. And we can do this on any time frame. How exciting is that? We don't have to wait 24 hours. We can go to a lower time frame and take a few trades during our lunch break by finding demand or supply and be done for the day. How does that sound? Awesome, right? Here's why. Here's why this is important. If I see the demand zone and I've recognized it just like you have, you put your order in there. The more people that see it around the world, the more confident Donnie has to enter this trade. What about the two smaller candles equal to 50%, combining them? Kind of not sure what you mean. What about two candles smaller? It doesn't matter how many candles, as long as those two candles, Donna, are more make up 50% or more of that bearish candle, you have a demand zone. You have a demand zone. Now, does that make sense to everybody? Now there's another way to find a demand zone. I know I got 30 minutes left, guys, so bear with me. Yep. Okay, good. Another way the market will move is what's called a rally-based rally. So the market will push up and it will look like this. Let's say the market's buying. And then all of a sudden, the market pulls back and it creates a bearish candle. Do we have to wait and watch the chart until the candle reaches the zone in order to take the trade? No, Miss Pat, set an alert. Set an alert and walk away. Set and forget. Set an alert and go away. Set an alert just shy of that zone so you know prices come back to you. That's the best thing about trading is you guys can set alerts and get on your phone. So prices pushed up, pulled back, and then continue to push up. Everybody see that? The demand zone in this, what we call rally base rally. Notice how it's, look at the base. It's got two bases, right? Two bases. Rally base rally. The demand zone is represented by the body of the bearish candle in this movement. Therefore, this candle represents the demand zone. Look at that. Does that make sense to everybody? I just wrote that in my notes. Good job, John. I like that. Look at that. So if I can recognize that the price is pushing up, look here.
You need to make it green.
Oh, yep. Oh, yeah. Sorry. See, my students know my OCD. Look at that. Make it green so the buyers know. That's a green, right? Yep. I like that. Good job, guys. They know. People know already. Yep. Okay. Somebody said bulls demand you to go up and bear supply. Yep, where the claws take you down. Yep, but you got to understand those are new orders. All right, Brian, new orders. Okay. Supply and demand is much easier, exactly because if you look at supply and demand, you have your bases, your support and resistance lines actually on supply and demand. So let's take a look here. Man, I love the fact that you guys are having so much fun with this. Look how price pushed up. We see this? Pulled back and then pushed up. Right? Have so much to learn, recap, but this is exciting and I can't wait to start Forex trading. I feel like a kid in a candy store. I love it, Brent. I love this because I love watching you guys make money. So does everybody see this pattern? This is called a rally base rally. The demand zone is represented by the body of the bearish candle. So therefore, we have a demand zone. Does everybody see that? Everybody understand how I found that demand zone? Right? Bearish candle, bullish movement. Because if the market is trending up, these are going to be the best times to get in on the pullback. So as a market is trending up, somebody said, how do I know when to get in the market if it's trending up? On the pullback. But 90% of the time, the pullback will create a demand zone. How easy is that? Right? So now let's pay attention to this demand zone. Let's see what happens. Does the demand zone look the same on a smaller time zone? No, it does not. It might give you oh, this one does. And remember what I said, if it's on multiple time frames, it's possibly a good demand zone. Okay, but we'll get into that later. That's more of a little bit in the future. Right now, if I wanted to buy, I'm going to buy down there. Imagine buying up here at the top and you got in for a buy because you thought the market is going to be going up, but now you're in major drawdown. You just lost $150. But if you see this and you know you see it, would you enter a buy here? Yes. So as price comes down, look at that. Price is teasing me. Look at that. Uh-oh. We got a problem here. I wanted to get into a buy here, but what did this candle just do? Uh-oh. Uh-oh. What did this candle just do?
Broke below the zone.
It went below the
It
zone.
closed below
Your zone. Your
my
base.
zone. Write this down. A close in a candle, write this down. A close in a candle will flip who controls a supply or demand zone or a support or resistance line. Yep. Remember, the close of the candle, the body, not a wick, the close. Nope, not yet, right? But now, remember, we're not talking about support and resistance right now. We're talking about supply and demand, okay? So this zone now flips to the sellers. The sellers now have taken over my base. If I'm in this buy, right now, the only thing I can do is either stay in this buy or get out the trade. It's up to the trader based on the information that we have, right? Boom. Look what happened. The sellers took over the zone and made it a supply zone. Therefore, when price came back to the supply zone, what happened? It sold. Look how cool that is. It sold. Buyers didn't control it no more based off of this candle close. Does everybody see that? Does everybody see how that zone flipped to a supply zone? Okay, we call it a flip zone. It's nothing more than a supply or demand zone being flipped in the market. All right, let's see what this flip zone, why did it flip? Vic, it flipped because this candle closed below the zone. Therefore, the demand zone, scholar, became a supply zone. Okay, the demand zone became a supply zone because of this previous candle. All because this guy had to close below. And it flipped it. So watch what price does to this flip zone. But before I go into the flip zone, we see how a rally-based rally is a demand zone. A supply zone is nothing more instead of rewriting all this, I'm just simply going to Control A, copy, and we're going to paste this right here. And then we're just going to simply go. That's why trading is so much fun. I can do this all day, guys. A supply zone is just the opposite. A supply zone is a bullish candle, followed by an exaggerated bearish candle or movement. The word movement represents or represented by multiple bearish candles. The exaggerated candle or movement must be represented by 50% or more of the bullish candle. The supply zone is represented by the body of the bullish candle. It's just the opposite. Right? The body of the, so look at this. We had a rally-based rally, and we know that price has flipped it. But just above us, we see a bullish candle followed by an exaggerated candle. Does everybody see that? Let me make them bigger. Look at that. We have an exaggerated candle. This exaggerated candle, and I'm just going to move this one for instructional purposes. This exaggerated candle and the bullish candle, is that more than 50%? Yes. Right? Yes. Just that one candle did it. Look, we had another candle, so we could have used that if we needed it. Do you see? Until another bullish candle shows up, we can keep going down if we need to, depending on how big the bullish candle is. Okay? Now, the bullish candle, or should I say the supply zone, is represented by the bullish candle. Okay? Look at that. Body of the bullish candle. So we have a supply zone there. For those who already know, this is a drop base. We have two bases, drop. So technically, for my advanced students, they know they could use this whole zone. This whole zone is a drop-based drop, okay? But for instruction purposes, right, we're just talking about just a simple demand zone. One candle followed by an exaggerated candle or movement, right? So now price closed below this buy point, right? So we were selling from here to here, okay? Making both of these a supply point. Watch what happens on both of these zones. Did I kind of make supply and demand zone finding it really simple? Look for one candle, right? Bullish or bearish, followed by an exaggerated candle of the opposite side. Okay? Taking all the guesswork out of this. Holy smokes. Now, this was news, okay? This was news. Now, I want to show you guys something. Notice how price creates a brand new demand zone. Everybody see that? Look at that. One candle, exaggerated candle because of news. This old demand zone, because they're right on top of each other, goes away. You always go with the newer of the demand zone because buyers have now switched their price point, okay? So this demand zone is now valid. This one is no good. Don't need 3 flips. If it was created in the same vicinity, you don't need it. And this is a demand zone. And watch what price does. Look at the first buy. Price came all the way back down. And the only place that we knew that we could buy from was here. Do y'all see that? Does everybody see that? How price rejects off the demand zone? Because that's where orders were at. Guys, in trading, if you know, how much confidence would you have entering this buy? I got 180 people on here. How much confidence would you have entering this buy? Because that was the only other place we could buy from, or from the high, right? We do have a base here. Price holding above this base, right? Again, I'm very color-coded, so please forgive me. This is very confident. Trading is about confidence. I told you that, guys. Not about money. I'm worried about consistency. Consistency builds confidence. Confidence is going to build now your lot size. Okay? So look how much money you made just by waiting until price came to where you knew other people were helping you at. So if I knew John was standing there and I know that I'm being chased by the enemy and I know where John, Kathy, and everybody else is located, where am I going to run to? Where they're at. I'm going to run where I know John and Kathy are at. I'm going to run to my support. Does that make sense to everybody? I'm going to run to where I know the new troops are waiting. The resupply point is waiting. This is boot camp. You just learn how to fight a war. The support zone, right? That demand zone. And look at that. 146 pips at $5 with confidence because other people got in the trade with you. Now, price breaks. Do you know price is going to break? No. Don't know. I'm not a market mover. But I do know that price broke this supply zone. What does it become? or demand zone, excuse me, what does it become? It becomes a
Supply.
supply zone, right? Supply zone. But now as it's been broken, keep in mind that it's been broken twice. Same rules apply in the E3 strategy. After it's been broken more than 3 times, you get rid of it. Okay? I still got a buying point. We have a selling point. Let's see what the market does. Boom, right into a demand zone. Buyers came in. Boom, it broke through. Buyers weren't strong enough. We're selling. What happens to this zone?
It got flipped.
Yeah.
It got flipped, right? It's flipped into a sell zone. So what can we do now? Can we take off our coat? Can I now please don't yell at me. Can I now become a Packers fan if I know they in the Super Bowl? Can I become a bandwagon and change teams?
Yes.
Yes. Flip.
So now I got a Packers jersey on. Okay. Now I got a Packers jersey on. Like I said, I love because I don't want, she getting ready for the game. So I'm gonna take sells. Sellers are there. Look at that. Seller played out. Because I know sell played out. Look at that again. Still selling. That's the only information I have. Price is still selling down to this demand zone. Now notice here to my left, I did have a drop-based drop. And a drop-based drop is nothing more than a bearish candle followed by a bullish pullback and then another bearish candle. See that? That's a drop-based drop. So just like a rally-based rally, that's a demand zone, a drop-based drop is a supply zone. But it broke above, so it was a demand zone. Look here. I love supply and demand zones. They're just so fun and so easy to buy off of. Look at that. That was a sell zone, but this candle closed above it, flipping it to a demand zone. Do we see that? And now look at the buyers. Took over that zone, bought right out of it beautifully. And as price came to it, it broke it. Y'all see that? It flipped it again. Supply and demand zones are so much fun. I still have a demand zone for buyers. I have a new location for sellers to enter the market because I don't know if the price is going to keep selling, right? I'm a new trader. I don't know, so I'm not just going to push the button in the middle of no man's land. If there's nothing going on there, do not push the button. The E3 strategy is based off patience unless you're doing scalping off the E3 strategy. But they all work the same. Where are my traders that who trade with me now? Give me a fire emojis in the chat if you made money using the E3 strategy. So now look at this. Boom, price bought. No problem. I'm not mad at this. Right? It bought off of a high. We see here we had a support line there because it was a pullback. Price down, pulled up in a downtrend. The market pulled back, so that was a high. Look at that. That's fine. Supply zone. Boom. Straight broken. Straight destroyed. 1, 2, 3. This zone is gone. Do y'all see that? Zone was annihilated. Now, the question was before, do bigger zones mean that price is going to target that? So if I have a smaller zone and a bigger zone, which one's more stronger? The bigger zone. All right. The bigger zone is stronger. So if you get a really small middle point, whether it's a supply or a demand candle, right? A supplier demand, and they're small, do note that that base can only hold 5 people. All right. So there might not be a lot of orders there. Does that make sense? So the smaller the zone does mean something. Okay, it means the buyers took over. They didn't need a lot of people, but it wasn't that many buyers who took over at the time. Okay, so yes, that does mean something. All right, demand zone. Price bounced out that demand zone again for buys. Look at that. Look at the confident buy out of the demand zone. 866 pips. I only trade with confidence. How much confidence did I just give you guys? I only trade with confidence. If you learned something today, give me 4 5s in the chat. That's my sister. What's up, Miss Diva? That's my sister. 4 5. Look at that. People learn something. Look at that's everybody in here, right? Trade with simplicity, trade with confidence. The E3 strategy says, nope, I'm not getting in the market now. I'm going to wait. And I always had a saying back in the day, which is crazy. I always told people when my sister, Miss Diva, figured this out, you guys were in trouble. And I used to tell her all the time. And it wasn't the knocker. But she would ask 5 million questions a class. People would start sucking their teeth and getting upset. They'd get mad. But do you know today she is now teaching other people on how to mark up their charts? Thank you. See, there she is. And now I'm teaching beginners. She is now running her own teaching call with confidence. I jump on there all the time. And now people who were sucking their teeth before are now getting on her call. John, and that's good. I want you to ask 1 million questions. I'm going to answer 1 million questions. The build program is made to answer 1 million questions. But then we have to understand that there's a thing called rules. Write this down. Before you start trading, you have to come up with rules. Okay? Rules. A rule is something you live by. We follow the rules. We color inside the coloring line. We follow these rules. How easy did I just make people find supply and demand? So if you're looking on a live chart, you can see supply and demand. Right now, this is a live chart, right? Price is currently in a demand zone. Well, let's measure. All right, this is current Bitcoin. I'm going to measure because I don't know. I'm going to measure from here to here. And it just made it as a demand zone. Does everybody see that? Yes, this call is being recorded. It just made it. But I believe the recording, you'll get the recording, Rodney, goes out to the build members. So if you guys want the recordings, you're definitely going to want to get back to the people who invited you on this call. Okay? I have a demand zone. As I can see here, price tried to reject off the demand zone once. It did twice. And now it's falling through the demand zone. In a demand zone, I have 2 entry points. I have the front wall of the demand zone, and I have the back wall of the demand zone. Think of this as your castle. So in a demand zone, you have a front wall if price is coming down to it, and you have a back wall. If the enemy troops, the sellers, take over the front wall and price closes in this zone, this front wall becomes a resistance line. Now they're inside the castle, inside the demand zone. But guess what? I still have my archers, buyers on the back wall. So now if I'm looking to take a buy off the market based on the 1 hour, I'm going to say I'm going to get in at the back wall. And then I'm going to push the troops back to the front door. Does that make sense to everybody? So you have 2 entry points. You have the front wall and you have the back wall. You have the top of the demand zone or the back of the demand zone. Brandon, you can automate this if you need to, but right now this is the beginner basics. You know what I mean? But yes, you can automate this. Yep. Okay. Does everybody see that? So I know where I can enter the market. If I entered at the front wall, based on my rules, again, that rules, the back wall would be I would place my stop loss below the back wall. If I get in at the back wall, I don't have anything to worry about. My stop loss is going to be way down here in the field somewhere. Somebody said, what should my target be? 20 pips. Everybody write that down. Part of our rules is we are looking for 20 pips. Okay? In the market. 20 pips a day keeps the job away. 20 pips trades. Yep, some of my traders know. 20 pips. I'm looking for 20 pips. 20 pips isn't a lot. This is a big zone. Y'all want to know what 20 pips looks like? That's 20 pips. So just from price going from here to there, you just made $200. How many people are sold? Just to go there, that's 200 bucks. That's $20. That's $2. That's how easy trading is. Okay? So that's what I look for in a supplier demand zone. If price breaks through it, I'm going to enter at the back wall. Now, you can go to a lower time frame and find a baseline or something inside of this big zone. Remember, this is a really big zone. So if I got a really big zone on 1 hour, I can go to a lower time frame and find another demand zone or something inside of that zone. As we can see here, price is currently being held up by this rally, base rally inside the zone. Look at that. I bought my annual subscription yesterday. Nice. Wait. We got annual subscriptions? Nah, don't tell me that. Don't tell me we got annual subscriptions. So you telling me somebody can pay one time and have access to Donnie Pips for the whole year? If that's what I just heard. Look at that. Price is being held off this demand zone. So if I wanted to, I can take this trade on Bitcoin, right? Look at, I just entered the trade on Bitcoin, and that was on. So this is a live chart, okay? This is a live chart right here, okay? You can take the trade on Bitcoin, but everybody see how I entered the market? I'm down 90-something cents. If you look at my chart, this is a broker, okay? And I have a stop loss and take profit here. If I pull this, look, I have a drop base drop there. Remember that rule? I have a supply zone, okay? I have a supply zone. I had an entry area. First, let's go back. What time frame did I enter the trade on? The 30 minutes. So I'm going to go and make sure I'm on the 30 minute. So I'm going to make sure they match. And you guys, we're going to go over this in depth. Notice how I have a supply zone right above me on the broker. I can set my TP up to this supply zone and I'll make $4.50 because I only entered at a micro lot, put 0.03. So that means 10, 20, 30 cents. I'm only making 30 cents a pip. Make sense? Just about, roughly. And I'm going to hit change. I'm going to hit change. So that locked in for me. Look at that. So I'll make $4.50 off this trade if it pushes up. And then I'm going to set my stop loss. And I'm going to set my stop loss at, I'm going to do a 1-to-1. I'm going to do $5. So I'll bet risk $5. I'll make $5. Okay? How's that? There we go. I'm going to put it at the back wall of the supply zone. And that's called the 1-to-1 trade. Look how easy that is, guys. Look how I entered the market. Okay? Look how I entered the market. Price is pulling down. I'm okay. I have my stop loss set, my take profit set. Now, remember, I said I wanted to make sure that my stop loss was set based on the 1 hour. So I might want to put it outside of that zone, which is only going to put me at $8. I'm okay losing $8. But my trade is now set. Y'all see how easy that was? Very easy. Okay. Here's what I don't recommend. Price starts dropping, and then you decide, I don't think I can. I don't have enough. Yep. You decide to get into a second trade. And now you have gone against your margin, and now I'm in 2 trades in drawdown. I don't recommend doing that as a new trader. Bad move. Because remember what I stated, this ultimately was our entry based off of the time frame we are trading on. This is my entry. So for my new traders, I don't recommend you move. So rule, 20 pips a trade. We're about to get out of here in just a moment. Have a trading plan. Write that down. Have a trading plan. And I have a class on trading plan in the back that'll be there as well. Have a trading plan. Have a real goal and target. Do you use something to log your trades? Yes, I have a journal, trading journal. Yes. Have a real goal and target. A goal is what you want to make per trade. A target is what are you trading for and what are you trading to? So my daily goal is $350. My target was $1 million. My target is 50,000. You can't get to your target without not hitting your goals. And I think Mr. Bean is the best at talking about that. I know Ms. Kim was talking about that the other day. How do we get people to reach their target? Well, first let's set their goals. Follow the system. Our goal is $150 a day. That's $15 a trade. Any questions? I'm going to open it up real quick for questions. Any questions? Told you guys, we're going to look at some banger stuff today. Did you get clearance to recommend a broker? Global Next Trade is a great broker. They're an A-book broker. I know some of you guys have hit out me up and say, hey, my broker is having issues and things like that. It's being shut down. I'll put a link here in the chat in just a moment for you guys, if that's okay. To the appropriate broker. I just want to make sure I got, the okay. I don't want to do anything, that does.
Hold on one moment. When it comes to the broker, let me clear that with Mr. Navarro.
There it is.
Make sure we get that to you guys as far as the brokerages and things like that. How we're going to handle that after the call is over. Want to make sure we don't cross any lines and any boundaries.
Yeah, and that's the only thing is that there's ethical rules that we have to apply to. But there's several brokers out there. I normally recommend 3. Just to keep it fair, you have Global Next Trade, you have Liquid Markets, and then you have Owanda. Owanda is a 50 to 1 broker. So you have those different brokers out there. So I always give people choices. Okay. All right. So real quick, guys, back over to you, Sam. How do you guys think? Give me some emojis in the chat if you learned something on these 2 days. Which subscription? The very beginning subscription, the $15 Daryl, is all you're gonna need. $15 is all you're gonna need. I suggest you join Build. That way you can get your LLC, and now your subscription becomes a tax write-off. Right? Your subscription becomes a tax write-off.
Yes, sir. Yes, sir. Yes, sir. Well, ladies and gentlemen, again, let's see some fire in the chats, guys. Let's see some emojis. Show them some love because, again, that's 2 days. You talk about a man who's literally, as we speak, caring for his mother. In New York, lives in Miami, but he's caring for his mother and he's caring for you guys at the same exact time. Again, you guys have already showed how much you appreciate his time by being here. We've held over 200 people, a captive audience of over 200 people on all platforms 2 days in a row. You guys did not drop off. You guys picked it up, and you guys kept on inviting all the way through, which is what you're supposed to do, which is great. I'm excited about this guy's fantastic job, Donnie. But when it comes to this event, guys, I'm gonna tell you, the whole entire time, I literally had to turn 2 of my phones off because I was getting text messages through the people or from people in Build, from people who I had as guests, from people who were internationally looking at this opportunity and looking at the trading program that we're launching, and people are like extremely impressed, looking to talk with me today, tomorrow. And I'm quite sure a lot of you guys have been getting the same exact thing because if you had them on there, they got a chance to bear witness to it. And most of you guys have seen it yourself. So let me ask you guys a question. If about show of hands or some ones, how many of you guys feel like now you're not so fearful and it's not so intimidating? Now you can go in here and trade with us as a family. How many of you guys, real quick here, some ones, some fires, some chats? All right. There you go. There you go. All right. All right. All right. All right. There we go. Okay. Now, and for our experts, the people who've been in here been trading for a while, how many of you guys feel like you can take your trading game, your skill set to the next level? How many of you guys now say, you know what, I know how to trade, but why trade everybody when I got Donnie or when I got Roxy or when I got these trainers that are coming on board, proving themselves worthy. I got these people to do it. Why? I mean, you guys can see your business going to the next level trading wise, and you also growing a community here. Put some ones in the chat, some fives in the chat for that as well. All right, because that's what this is all about, guys. This is like when I say a platform for entrepreneurs to go out here and do some amazing things. This is one of the most powerful lightning rod type platforms that we're adding, to our portfolio. And guys, I can see the future with it, and so I'm excited about that. Now, what I'm more excited about is this: I have the CEO on the line, a person who, without him bringing this thing to fruition, we really wouldn't have the opportunity. Let me see. We really wouldn't have the opportunity to have this opportunity. So again, his brilliance, his idea to bring trading to the fold, to the platform, was amazing. It was exactly what the company needed, exactly what the doctor ordered. So, Mr. Winston Navarro, I know you're on. If you could please come off mute and bless the audience.
Yes, sir. Can you hear me, Mr. Bean?
Loud and clear, sir. Loud and clear.
All right. Thank you. Thank you. Thank you. All right. So that was exciting. To keep that many people on a Sunday morning for 3 hours, you got to be good to do that. Thank you, Mr. Donnie Pips. I got to tell you guys, the one thing that excites me the most is that all the right people are coming together at the right time in the right place. And I can't express my gratitude to Mr. Bean and Mr. Donnie Pips here, because they came in, they saw the vision of the trading, the addition of trading, and I couldn't be happier at being able to. It's all about relationships, right, in our business, and we got to find and meet Mr. Donnie Pips, and he caught the vision here with Build, and now this conversation started like a week ago, and now here we are learning his strategy, which I had already heard about, from other people that have learned it from him. So this is exciting to get to learn it from the man himself. So thank you, Mr. Donnie. Thank you, Mr. Bean. And so this is just the beginning. And let me share with you guys my experience in the trading world. When I was 21, I started my journey in trading. So if you think 6 hours over the last 2 days was a long time, I'm 42 now. So I started at 21 in the trading journey, and I paid a lot of money. So you guys, you can look it up. I went to the Online Trading Academy as my first. I said, hey, I want to go to the place where I'm going to learn from real traders. That's not a cheap place to learn, right? 20K. It's like I paid $21,000, and that was after 20K. A scholarship that they gave me. So it was $35,000 for all their courses, $21,000 after the scholarship discount. So, and after all of that, I still walked away from there knowing how to draw lines and read charts, but not really hit with the strategy outside of their core strategy. So after that, I went on a journey, learned from a bunch of people. And here's what I'll tell you. It is just as important to not learn from certain people than it is to learn from the right people. It's just as important, right? Who not to learn from, because you can go down a rabbit hole, right? And you're going to get people saying, hey, all this information, I can pull it up on YouTube. And it's part of that is true, but good luck trying to piece it together, right? So we're going to give it to you here directly from traders who actually trade. So I'm excited about this vertical within Build that I think a lot of people are going to be attracted to. So Mr. Pips, thank you for today. That was amazing. I've been through a lot of boot camps, but you have a gift and a knack for teaching. Not all traders can teach. And this is the hard part about putting this together, is that you have to find somebody that can actually do, but a lot of people that can do can't teach, right? So we're blessed that we have Mr. Pips here that can do and teach and do a great job at the teaching part. And so we're excited. I'm gonna get ahead of myself a little bit here. I think he himself mentioned a little bit about having him. Imagine having him be the one trading your account, or you being able to follow his trades. So we are going to be making an announcement in the next, let's just say, week or two about a trading software, a platform where we will be able to make that happen, right? So for those of us that aren't great morning people, or that don't have the time because we're busy with other stuff, that would still like to benefit from, from the markets, we're gonna make that happen for you guys. And it's something that's been a long time coming. I'm talking about 4 years in the making. So a lot of this stuff takes time, but we're almost there. So we're gonna be doing more. Correct me if I'm wrong, Mr. Donnie Pips. Today was just like a teaser, right? Just an introduction to, I know there are a lot of questions. A lot of questions were answered, but there's still a lot more. And here's one thing I will tell you, and I'll close with this. I know we've been on here for a really, really long time. Here's one thing I'll tell you. Trading is not for everybody, right? That's a fact. However, I believe that everybody should try it at least once. Give it a real shot, because you never know if it was going to be you, if you're going to be the one that's going to be good at it, right? I've seen people be good at it that I probably didn't think we're going to be good at it, right? So it's not for everybody, but everybody should at least give it a real shot and give it a try, because you'll never know if you don't. So everybody enjoy the rest of your Sunday. We have a lot more coming out, and this week is we're gonna be on fire. We'll give a lot of announcements this week. Mr. Bean, did I miss anything?
Yeah, as a matter of fact, guys, for those of you, because we have a lot of guests on, get back with the person who invited you. Make sure
Yes.
you get whatever questions you have, get those answered and addressed right away. And I know yesterday after the event, we had a lot of people who are already in Bill saying, "Hey, how do I sign up for it?" Guys, you're already signed up for it. You're already in it. If you're a builder, that is. If you're an affiliate, I would highly suggest you upgrade like yesterday. But if you're already a builder in the program, guys, you already qualify to be a part of the learning and part of platform and the live trading and stuff like that they're going to be doing. So get back with your leader so you can get further information and strategy sessions set up with them. So with that, there's nothing else that need to be said, guys. Just make sure you're in the WhatsApp group, paying attention to the alerts so you can hear about all of the upcoming sessions and things that we have. Also, go into the Facebook group, guys, because it's recorded, right? In the Facebook group live. Tag all of the people who didn't get a chance to make it because they were at church today and they worked yesterday. Give them an opportunity to see what you saw. Give them an opportunity to experience what you experienced. Don't try to explain it because you can't, right? Don't try to give them that emotion, that feeling, because you can't. Tag them in it. Have them go back and watch it, and also put in what some of your takeaways, feedbacks, and nuggets were, because that's going to give extreme value to the people who are going to be trying to figure out what exactly did they miss when they see all of your comments. So with that, on behalf of Build Network, CEO himself, Mr. Winston Navarro, and yours truly, Mr. Donnie Pips, you kept it pipping today, guys. Well, we'll see you guys at the top. We'll see you guys at the bank, and we'll definitely see you guys on the beaches of the world spending that pipping money. We'll talk soon, guys. Bye-bye.